are expected to generate approximately $7 billion in contracted revenue over the approximate 15-year terms. Since the end of the quarter, we're pleased to announce that CoreWeave has exercised its lease option for an additional 150 megawatts. When the lease is signed, it would bring the total lease capacity to 400 megawatts of critical IT load and add approximately $4 billion in contracted revenue, which would bring the total contracted revenue to approximately $11 billion. Building on the momentum from these leases and the surge in demand for AI infrastructure, we're actively marketing our multi-gigawatt pipeline to a diverse group of customers. Over the past 2 years, we've streamlined our processes, enhanced our building design for greater flexibility, and established a repeatable approach supported by a strong supply chain. As a result, we've reduced projected build times from 24 months to 12 to 14 months, which we believe will enable us to deliver large-scale projects faster and more efficiently. Okay, so folks, this is a story of a company that successfully got a big deal with CoreWeave, with NVIDIA, and now is using that and its other successes as a balancing board to market for more customers and deliver substantially reduced project build times and an overall better, faster, more efficient service. So very, very beautiful. And at the same time, this is in the middle of the most aggressively growing industry. There's accelerating demand for large-scale AI optimized data centers all across the board, and this company, anchored with multi-billion-dollar lease deals, is a top candidate. So overall, very good long-term play. Now, what about pricing? What is a good price for APLD? Obviously, we are cheap here at ZipTrader. We don't like overpaying for things, and the great price range for APLD has always been below that $11.50 trend line. Obviously, we made that famous video at less than half the current price, but still overall bigger picture based on how I see this trading over the next 5+ years. I think that if you're at under $11.50, you're going to feel very, very good about the risk versus reward there. Now, what's the best way to play this with options, Charlie? Well, back on June 27th, we alerted $12 strike calls expiring October 17th, 2025, and those have done phenomenally well. But nonetheless, it's now time to consider stretching the next calls out to a time frame that looks farther out, like mid-2026. And if you are in the Discord, be on the lookout for the next round of alerts on APLD, because we are going to present a new call idea for this. I don't want to do it immediately right now because I want the stock to get a little bit more discounted to cool off a little bit from the earnings report last week. But once that happens, I'm going to feel good about it. Speaking of calls in the Discord, let me formally invite you to join us in the Discord with that first link down below. Some of our top ideas include AMD calls, which opened at $4.74-ish after our alert in June and ran to $35.30 at highs just recently. MP calls that opened at $1.96-ish after alert and ran to $25 at highs. Beautiful. And VTS calls that opened at $2.17 after alert and ran to $4 at highs shortly later. Palantir calls, which we alerted back in December and isn't super far away from 10xing. Now, these are our top winners, and it's important to keep in mind that options trading and trading in general is hard, risky, and results are not guaranteed and shouldn't be expected to be replicated typically. We are in a very beautiful and unique bull market, and these bull markets don't last forever. But anyways, no matter rain or shine, we are big believers that it makes sense to buy good assets at good prices, and when it comes to options, allow time for the story to play out, not just need a stock to go up or down massively in a day or two. And so rain or shine, we're always going to be doing our best to give you the best ideas. And so if you would like to join us in the Discord, well, it is that first link down below. Anyways, have a great rest of your day. Let us know your favorite plays, and we'll see you in the next video.
This little box is part of a billion-dollar network no one uses. It's called a helium miner, and I was gifted it by a friend who told me that it would pay me every day just to sit on a shelf. How? Radio waves, magical thinking. I honestly didn't care. It was free for me because it was a gift. I'm heavily in debt from the $10 million studio, obviously, and so I had nothing to lose. And fast forward 4 months, we finally have the results, and they aren't great. I've made $22 with this little thing, which is a 20th of the cost of the actual machine. It retails for about $400, which means if I had paid for it, I'd break even in about 6 years. But even worse, the daily rewards of the helium miner have been falling fast, partly because of the discovery that most of the revenue of this network come from other miners buying more miners. And finally, it looks like it's collapsing, with users complaining very loudly on Reddit, and things just look really bad. And today, I want to tell the story of how that happened, how this little company, Helium, grew a billion-dollar organization building a network no one uses. Helium was a company that originally started without the idea for a crypto coin. It was first a company trying to help build the Internet of Things. You guys have all heard that buzzword before, right? Internet of Things, or IoT. It's basically the trend of putting Bluetooth in your toothbrush, radio sockets in your socks, basically connecting everything with the internet, even things you wouldn't expect, like this ring on my finger right here. Right now, it's selling health data to some overpaid pharma rep as we speak. That's IoT. And the point is, if you're going to connect everything to the internet, these IoT devices, which are much smaller usually, have different needs than something like, I don't know, your phone. You don't need to transmit large amounts of data. You're dealing with tiny batteries, and you need these devices to work over long distances, which is why Helium uses a special frequency range called LoRaWAN, also known by its much catchier name, LongFi. And you don't need to fully understand LongFi to just know that Helium set out to kind of catch this wave of Internet of Things devices. But as they set out to build this network, there was a big problem, because how can you afford to build a huge network without people paying for it first? And on the other hand, how do you get people to pay for you to build a network without building it first? It's a classic chicken or egg problem. And Helium struggled with this until they found out about crypto and devised a way to do both at the same time. They did this by creating a crypto token called Helium Network Token, or HNT. It works in two ways. On the one hand, it rewards people who set up hotspots, that's on the supply side. And on the other hand, if you want to use the network, you buy HNT and spend it on the demand side for data credits, which is simply a tiny packet of data. And the idea was early adopters who set up little hotspots like this would make lots of HNT, which in the future would be valuable as more and more people needed to buy these data credits. It all sounds pretty good, right? So what's the catch? Well, for a long time, this really was the rocket fuel that propelled the Helium network. And it was pointed to as a real use case of crypto. I'm sure you've heard before, like, what do we actually use crypto for? Well, oftentimes people would point to Helium network as a great example of real world use cases of crypto, because a single crypto coin was bootstrapping an entire wireless network. No small feat. And for a while, things were going great. Hundreds of thousands of regular people were setting up and spreading the word of wireless hotspots. And of course, passive income.
This is the best way to make passive income.
Passive income.
Passive income.
And I can't stress enough how much of the adoption of these Helium miners were due to thoughts about getting rich and passive income. And initially, payouts were eye-watering. It was a lot of money. Some miners were making hundreds of dollars, if not $1,000 a month, just from one miner. And if you consider that each of these cost about $400, it wasn't hard to see why many people quickly ordered more and then more, because they're literally little money printing machines. And demand for these machines grew so fast that it actually became impossible to order them for a while. They were just out of stock. People even joined waitlists that were over 6 months long for these things. But eventually, these supply issues were able to be worked out, and the supply of these little guys exploded. Just in the year of 2021, they started the year with 14,000 of these hotspots deployed, and they grew that to 450,000 in 1 year. That's over 3,000 hotspots a day. Right now, they have 900,000 hotspots, which by anyone's standard is impressive. However, behind the scenes, trouble was brewing. The first sign of trouble is when Helium started to reach a saturation point in trouble was brewing. The first sign of trouble is when Helium started to reach a saturation point in the market for hotspots. Basically, Helium operates on a grid system where you're incentivized to provide coverage in high usage areas. By looking at the data that the Helium network themselves provide, we see absolutely abysmal rates of adoption. Remember that in 2021, the number of hotspots went absolutely parabolic, as you can see here, and one would hope that usage would follow. But looking at the data credits used, we see a different story. Now, I'm going to have to explain what this chart means, but basically, this is the entire revenue of the network, the data credit usage. But not every part of this chart represents actual demand for Helium, because there are several ways you would use data
And 3CR0 Plays is now live.
It costs $10
Streaming
in data
Fortnite.
credits for
They
example,
ain't
just
on
to
my
set up
league
one of
slash
these
listening to
mining
stocks talk.
hotspots. But that isn't actually someone connecting an Internet of Things device. And
How about a drink?
So with the Fantastic Four movie having come out recently, I've seen a lot of questions from people who were asking, how powerful is Franklin Richards really? And this really comes in a lot of debates. People who think that Franklin Richards is as powerful or more powerful than the Phoenix Force, things like that. So we're going to clarify all of this and clear up all this stuff. We're actually going to use 3 stories to do it. We're going to talk about Daydreamers, Heroes Reborn, and Future Foundation issue number 23 to clarify all of this. But before we do, something that I want to specify here is the difference between a universe and a dimension or a pocket universe, because those are not the same thing. So a universe in Marvel Comics is just a space within the multiverse that houses stars and galaxies, solar systems, and other dimensions. But in effect, it's like rooms inside of a house, the house itself being the universe. Having said that, just because it's a room in your house does not mean that the laws of physics apply. So if we use Asgard as an example, right? Asgard as a dimension is much smaller than the overall size of the main Marvel universe, Earth 616. It's like a guest closet in your house, maybe even the master closet in your house. But the dark dimension is totally different. The dark dimension is like the tent from Harry Potter and the Goblet of Fire. If you guys remember that scene where they go into the tent and the inside of the tent is bigger than the tent itself, that's how the dark dimension works. So it'd be like opening the closet in your master bedroom, and that closet is bigger than your entire house. I know it sounds crazy, but in fact, the dark dimension is really that big. Now, there is a reason behind that. It goes by different names, the Splinter Realms, the Archipelago of Anguish, so on and so forth. But the fact is, at the end of the day, it is still considered part of the main Marvel universe. And that's where a lot of people get tripped up. The reason why is because in Doctor Strange Sorcerer Supreme, issue number 21, there was a backup feature in that story called Tales of the Dark Dimension, where Doctor Strange goes through and starts explaining the history of the Dark Dimension, giving a few more details than what we had already known. And that's where Marvel just started using the phrase dimension and universe interchangeably. And in fact, in that story, the Dark Dimension is basically referred to as being its own separate universe, completely removed from the main Marvel universe itself. And it actually went that way for quite some time. It was not until Ultimate completely removed from the main Marvel universe itself. And it actually went that way for quite some time. It was not until Ultimatum issue number Doctor Strange in the original Ultimate Universe killed by that reality's version of Dormammu, who came from that reality's version of the Dark Dimension. So that's when Marvel established there is a Dark Dimension within every universe. And so with that in mind, again, it's important to take away from this explanation that a pocket universe is not the same thing as a main universe itself. Pocket universe, dimension, these are interchangeable terms. Pocket universe and universe are not interchangeable terms. And so the reason why this matters is because while Franklin Richards has done all kinds of crazy cool things in his time in Marvel, pocket universe and universe are not interchangeable terms. And so the reason why this matters is because while Franklin Richards has done all kinds of crazy cool things in his time in Marvel Comics, he's aged himself into an adult, albeit subconsciously. He's resurrected Galactus from the dead. That's one of the most well-known moments of his character's history. Heroes Reborn is actually the first story that I want to talk about to what Franklin Richards is really capable of. And this was a story that came in the aftermath a huge event that hardcore comic book fans already know about, but in effect, pretty much all the superheroes outside of the X-Men and Spider-Man died fighting this just incredibly powerful guy named Onslaught. With humanity and Magneto's hatred for humanity. When all those super resurrected them all from the dead and put them in a dimension within the main Marvel universe called Dimension F. It also goes by the name Counter-Earth. But they had a whole history there, different origin stories, different lives, the whole 9 yards. Now, eventually, all that gets undone. Franklin takes them out of Dimension F and brings them back into the main Marvel universe itself. But it's important to understand here, this was a pocket reality. It was a dimension within the main Marvel universe itself. Now, this is visited yet again in a story called Daydreamers, issues 1 through 3. Enter into the Nexus. Once the man Man-Thing encounters them, if they feel fear, they burn at the Man-Thing's touch. So as you can imagine, very few people ever actually succeed in passing the Man-Thing's test and entering into the Nexus. Never explained within the context of that story, and that we still don't even really have a great explanation to. Franklin Richards seemed to have a pretty strong understanding of the form and function of the multiverse long before any of the events from Secret Wars 2015, when he had explored. There comes a point in Hickman's Fantastic Four when Franklin Richards from the future as an adult comes to the present day and wakes up the powers of his younger self. With friend Leech, a mutant with the ability to shut down powers, they enter into this pocket universe. And when that happens, they create all kinds of things. They create planets, they create stars, they create life, all kinds of life. They operate as superheroes, they do all kinds of nuts stuff. But everything overly clear with what was going on. The way that Valeria explained it to us by way of Susan Storm is that basically Molecule Man and Franklin Richards and Reed Richards were working together to restore the multiverse. It's not until you get to Dan Slott's run of the Fantastic Four with issue number 2 where he basically sits down and gives us a far more concrete explanation. And what Molecule Man says is that Franklin has the ability to conceive of a universe, to imagine a more concrete explanation. And what Molecule Man says is that Franklin has the ability to conceive of a universe, to imagine what a universe should look like, but he doesn't have the power to create one. Instead, he needs the powers of the Molecule Man in order to shape those powers into a universe, which is handed to Reed and then put into the multiverse. So in effect, Molecule Man is creating the clay. The clay is given to Franklin Richards. Franklin shapes it into, I don't know, like a coffee cup. And then Reed Richards takes that coffee cup and puts it on a shelf with all the other coffee cups. So there is a drastic difference between being able to shape an existing piece of clay versus being able to just create the clay of your own accord and then make it look however you want to. Franklin does not have that ability. He cannot create a full-size universe on his own. And so I think it's very important to specify that. And so with all that being said, it is also important to note here, Franklin is equal to Galactus in power, but there are limits to what he's capable of. For example, he cannot face off against multiple Celestials at the same time. In fact, we saw that in Fantastic Four number 604. That's the iconic story where Franklin basically uses the powers of his younger self to resurrect Galactus from the dead. But in the lead up to that particular moment, the Mad Celestials from an alternate reality looking to destroy Reed and then conquer the main Marvel universe, Galactus had managed to destroy one. The 3 remaining Mad Celestials merged into a composite being and they killed Galactus. Reed Richards fires off Saul's anvil, I think is what it was called, and splits the composite Celestial back into 3 Celestials, and then Franklin arrives on the scene. He fights all 3, he destroys one of the Celestials, and in the fight, that's when he uses the power of his younger self to resurrect Galactus. And at that point, it's 2-on-2. Galactus and Franklin versus 2 Mad Celestials, and they successfully destroy them. But in that conflict, one of the things that was stated by Reed Richards' father is that Franklin cannot win against those Mad Celestials on his own. He's simply just not powerful enough. It's just never going to happen. And so that right there kind of gives us a limit to what Franklin Richards can do. That yes, he can manipulate the very fabric of reality itself, but he can only really do what Galactus can do. Now, Galactus has done some pretty impressive stuff. For example, Galactus has left the main Marvel universe. In Al Ewing's Ultimates, he left the universe and even the multiverse and traveled to the far shore, one of the furthest places of all existence before you get to the realm of the Beyonders, the White Hot Room where the Phoenix resides, and even the House of Ideas where the One Above All resides. Now, we've never seen Franklin travel to the far shore, at least not that I'm aware of, and so there's no reason to believe that he actually can outside of the fact that Galactus could. So anybody who says he can definitively, they're largely just making things up and just assuming he can because Galactus did. But it's not as though Franklin is just someone walking around the universe and is largely only known to the Fantastic Four and Galactus and Celestials or whatever. Franklin Richards is part of the One Above All's plan, which is to say an Immortal Hulk is issue number 24, it was established that the intention of the One Above All is that when the universe or even the multiverse comes to an end, that Franklin and Galactus will merge into a composite being and be reborn into whatever happens next. That is, quote unquote, backup is Mr. Immortal. But I think that little tidbit is kind of cool, to be honest with you guys. I mean, it's not overly important, but it's pretty dope to know that the One Above All is well aware of who Franklin Richards is. But the last thing that I want to do here before we bring this video to an end
And
is I want to talk about the nature of Franklin in relation to the Phoenix.
Streaming
and specifically
Fortnite.
how the
They
Phoenix
ain't on my
Force
league
works.
slash
We won't make this
listening to
overly
Stocks
lengthy.
Talk.
If you guys are interested in that video, I can make one just about the Phoenix itself. But something to know here is that in the original Ultimate Universe, for example, that universe's version of Franklin Richards was a host for the Phoenix Force. In fact, we covered that story here on the channel like 7 years ago or something like that. But the Phoenix Force is far beyond Franklin Richards. Even before the retcons of Al Ewing in Ultimates and Defenders Beyond, the Phoenix was always beyond Franklin Richards, because the Phoenix Force exists on a multiversal level. No matter all the universes that exist out there, there's only one real Phoenix Force. Every version of the Phoenix that appears in any alternate reality that exists out there is just a portion of the Phoenix Force's larger power. And that's why fans will tell you that Jean and the Phoenix are not one and the same. A lot of people draw that conclusion because of like the classic X-Men stories, for example, where after the end of the Dark Phoenix saga, when Jean Grey dies, she meets with Mistress Death, and Mistress Death, as a construction worker, basically tells Jean that she's destined to be a host for the Phoenix. She is the Phoenix is her, but Mistress Death also refers to the Phoenix as its own entity. And over the years, other people outside of Jean have been a host for the Phoenix Force. But when Jean has the full totality of the Phoenix Force's powers in the form of the White Phoenix of the Crown, Jean Grey is second only to the One Above All. That was established in Al Ewing's Defenders Beyond when we learned that the White Hot Room is the final stop before you get to the House of Ideas where the One Above All resides. And that when Jean has the White Phoenix of the Crown power, she can create and destroy universes on a whim. There's no limit to the power that she has. Now, oftentimes it just kind of takes the form of quote unquote fixing what's broken, but basically making sure that every universe follows its same form and function. Again, that kind of goes into a more comprehensive explanation about the history of the Phoenix, Marvel taking the Omniversal Development Court role, handing it over to the Phoenix Force, and it kind of being that way ever since, you know, for the last few decades or so. But the fact is, right, this is all simply to say that the Phoenix Force exists outside the multiverse. Franklin Richards just exists on a universal level. So is Franklin Richards powerful? Yes. But if Franklin Richards fought the Phoenix would beat the shit out of him, and it wouldn't even be close. With that being said, guys, we're going to bring this to an end. Let me know what you guys think down in the comments section. Thank you all for watching, and I will catch you all later. Peace. What's going on, guys? This is Rob, and we are back with One World Under Doom. And this is why you don't trust Doom, and this is when Doom cuts loose. So, what we saw in the previous video was that Doom was facing off against Dormammu, and Dormammu was helping Doom understand his place in the bigger picture. So Doom had to call in for allies, and so what he gets are the Avengers, the Fantastic Four, and the X-Men. Now keep in mind, when Dormammu seized control, because Dr. Doom, when becoming Sorcerer Supreme, didn't really pay attention to the various, magical safeguards that had been established to prevent Dormammu from invading. Dormammu used that opportunity and then basically sent away or banished the X-Men, Avengers, and Fantastic Four. So Doom has brought them back, and that's why he tells them attack, because they immediately start going into Dormammu. Now, what makes this particularly interesting is that Dormammu's power over the years in Marvel has waxed and waned, because a lot of you guys will probably ask the question, why doesn't Dormammu just destroy them? I don't necessarily have an answer to that question. In Hellcat issue number 3, for example, from Steve Englehart in the year 2000, we learned that, like Dormammu, for example, was more powerful than Mephisto. But in the Herald Supreme story arc from Mark Waid in 2019, Galactus traveled to the realm of Dormammu, where Dormammu's at his most powerful, and then consumed him. So again, inconsistent power levels. So it's one of these things where you just kind of have to roll with it. But with everything going on here, keep in mind, Doctor Strange is still magically enchanted, although he does lack the Eye of Agamotto. And so what this does is this picks up with him telling the Scarlet Witch that her job here needs to be to essentially seal off the portals of Dormammu to prevent his demons from entering. Now keep in mind, the Avengers, the X-Men, the Fantastic Four, they don't necessarily trust Doctor Doom. But at the end of the day, when Wanda turns to Carol Danvers, the leader of the Avengers, Carol says, do it. So the response of Doom, carefully Wanda, do not aim your magics at his portals. You must cut off Dormammu's very connection to his dimension. And the response of Wanda, that's dark magic. It will not work. But the response of Doom, it will. And so initially Wanda thinks it's some kind of a trick. She thinks it's a ruse by Doctor Doom to maybe create some kind of magical feedback and take out all the magic users in the Marvel Universe. But the response of Doom, this is no trick, Wanda. I swear to you, on the soul of my mother, Doom fights for Earth. Now, when Doom swears something on the soul of Cynthia, you can bet your bottom dollar he's telling you the truth. It's probably the most important person in his entire life. The dude literally spent years traveling to hell fighting Mephisto to try to free his mother's soul. So it's no small declaration, and everybody in the magical community understands the significance of this, including Wanda. And so in turn, she casts magical spells that start blocking off the portals of Dormammu. And he is flabbergasted by this, right? You align yourself with him. And the response of the Avengers, we are not working for Doom, Dormammu. We're working for us. And Iron Man responds in saying, we just happen to have a single aligned interest right now, which is defeating you. And so Dormammu goes on the attack against everybody here. And for the most part, they are able to hold their own, but at the end of the day, they're a distraction. And Doctor Doom even says that. They attack Dormammu with everything they've got. They attack him with prejudice. They keep him busy. Time enough for me to recover the Eye of Agamotto and use its power to restore my own. Now, here's the thing to understand about the Eye of Agamotto in Marvel. There's more than one. The version of the Eye of Agamotto that most all of you guys are familiar with is the one that provides knowledge, which is to say the ability to see through magical spells. But there is another eye that grants its wielder power, and that seems to be
Death is like the wind, always by my side.
I am the voice of the silence.
Dead man walking.
we had ourselves a volatile closeout of the last trading week, creating an outside trading bar. So we're going to talk about that on today's Stock Market Brief Show. We're going to give a snapshot of what happened, the market, some seasonality stuff, some updates on market conditions, the expected moves of the S&P 500 from a weekly basis and a daily basis going into Monday. We're going to look at some of the intermarket charts and give some updates on the signal charts. I'm doing this really because there's a lot of fear that happens when we see down days. And I'm going to go ahead and revisit these conditions to kind of ease those worries and be prepared for where the market can potentially go down to and what levels to watch for. Let's go ahead and hop into today's snapshot. We're looking at week-to-date performance over here. And you can see IWM fell the most at 4.22%. Towards the bottom, you see the stronger performers on the week-to-date basis. And that right there, you see a dollar that rose and oil that rose. When you get rising oil, right, and when you get a rising dollar, even when you get rates to come up, which we'll touch on, that has been so far a bad environment from a correlation standpoint for some various other assets. But lately, those correlations have been kind of breaking down. If we take a look at the 11 sectors that make up the S&P 500, from a weekly basis, our top performer and only sector in the green was the utilities sector, which on the prior video or the one right before that, we talked about how the rate of change of utilities relative to the S&P 500 has been showing outperformance and how it broke out of a base and we saw some follow through. So if you had any utilities, that right there was a saving grace in last week. So if you take a look at the S&P 500 on a weekly basis, we did have that outside trading week, trading well above the 40-week moving average. And for those that don't know, these bearish outside trading weeks can be considered reversal candles, right? A 2-bar reversal pattern. But, you know, you never really know the context quite and if it's going to happen. So you kind of look towards statistics to give you an idea. Hey, when's the last time this has happened? How, you know, how frequently do we get follow through and so forth. So I went back to just January of 2022, slightly before that. And what I found was 14 bearish outside bars. So you had 1, 2, and they're actually kind of marking around tops, as you can see, 22, slightly before that. And what I found bearish outside 1, 2, around, but not. So to dig a little bit deeper, I looked at, okay, which of these actually had follow through to have a week that closed lower the following week. So there was 9 follow through weeks that had a lower weekly close. And those are the candles that are highlighted in red. So you can see here, the following after the outside bar, we close lower here, 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 and so forth down the list. Now, this one's white as it stands right now because obviously we haven't had our next week. So what is the percentage basis there? Well, less than a standard deviation. So 64% of the time since basically January of 2022, you can see that there's about a 64% probability that we close the next week lower. Now, you might be able to raise this probability a little bit if you take a look at seasonality, where we are in the beginning of August. Well, first off, August in itself is rather of a flat month, but at the beginning of August, the first 7 days or so, 7 trading days, right around there, first week, first 9 days, whatever, it's typically pretty weak. So not only do we have a bearish outside candle, but we're following up with some weak seasonality, if you know that's something that you look at in the month of August. Now, what caused this? A lot of people like to look at narratives, right? But we were kind of ahead of the narrative. We knew that a narrative would come to be a trigger, which I'll show you. If you haven't been watching, by the way, if you haven't watched this show or this is your first time watching, well, let me know in the comments or just subscribe there too as well. But we had the stock slump on the latest tariffs and some soft jobs data. We had revisions taking place in the jobs data, and we haven't seen that type of revision since COVID. And then before that was 2008 great financial crisis. We had also Apple report earnings and Amazon report earnings. Apple started up on a little bit of an uptick, but then just sunk off through the entire trading cycle. fashion, and Amazon was not looking all too hot as well. Now, prior to all this, we were talking about the danger zone, how back month versus front month volatility was reaching into extreme levels, and this is where you typically can look for some consolidation or some pullbacks. On Twitter, if you don't follow me there, or sorry, X, you can follow me on X. The username is Mike P. Silva. Yeah, you probably just search figuring out money, but just make sure it's the verified one, and that's my username because there's a lot of scammers out there. But on July 29th, I posted that we're in an environment where we get many small up days, but when volatility hits, it wipes out 10 to 15 days of progress, and people freak out. Well, just take a look. This was that down day right there. And if you date back, that's, well, what, 15 to 20 days worth of progress. That is a type of market condition that we are in where you get many, many small updates. And what is the cause of this? It's when we're above the gamma flip line. It's when volatility is typically below 19 and sinking right down to 50, down to 16 and so forth. And the market just moves slowly, subtly, you know, and just like this. And then all of a sudden when volatility strikes, bam, we get a big down day. Now, we've been watching this positive gamma for quite some time, right? We've been utilizing this to determine market conditions. So you can see here, to no surprise, we actually fell underneath the gamma flip line. That's why it's turning blue here, and that's why volatility increases. That's why you see dealers start to selling to the selling, buy into the buying, volatility increases, liquidity dries up. That was this big portion in March to May, March to April, over here where the market was sinking off. That lets us really know and be prepared for how we approach our strategy in these markets. If you look at the VIX, right, these gray shaded areas are highlighting the times that the S&P 500 fell under the gamma flip line and then got back out. And you can see we fell under it, it rose, it rose, it rose, it rose. And then guess what? Right over here, we flipped under it right out of the open and volatility began to increase. Now, the reason also that we pointed out to be very careful around an area like this is because if you dated back when we showed this chart, we started dating back the last time we were over here in February. And in February, this was February of this year here, I believe it was February of 2020. Very careful around an area like this is because if you dated back when we showed this chart, we started dating back the last time it was better find entries if you were looking to buy the dip or look for key levels to trade. It was better find entries if you were looking to buy the dip or look for key levels to trade from. So let's go into market conditions. Give you an updated chart of back month versus front month volatility. We came up, we got extended, we went through 20%, right? And now what? Well, we're falling back down. So when we get through 1.0, if we get there, that's typically where the market looks to find. Just as if we got into an overbought area, now we start to look for these oversold conditions. Yes, it can get extreme. We've seen extremes happen. That's when volatility really fires off like a rocket ship. But, you know, volatility right now, if you look at the VIX, is not that high. It's at like 19 or 20 or something like that. So it's nothing crazy currently right now. So as of right now, you can see the gamma flip line is roughly at about 6,300. We are below that. Now, a couple of levels that I want you to pay attention to is going to be the quarter to date VWAP and the all-time high volume weighted average price. Those could be some levels of confluence right next to that gamma flip line, right? About 6,300
3CR0
that the
plays is now
market
live.
can have some struggle.
Streaming
now, if we can get
Fortnite.
above that and
Big
hold
Aint
above
on my
it,
league
that's a much
/listening
more
to
bullish
stocks talk.
sign. But as it stands right now, we are below it. Also to note, we're below declining 5-day moving averages in the SPY, Q, IWM, DIA, XBI, and the semiconductors here. So if you are a patient trader, you want to wait for the market to show strength versus you try to being correct before the market proves itself. Does that make sense? I hope it does. Let's look at expected moves. This is the SPY on the 15-minute chart. Going into next week, our weekly implied move is 635. I'm just going to round it to 635. If you want the exact levels, screenshot and put them on your chart. The lower earnings implied move is at 608.37. And what I shall note right now is you can see that the lower month-to-date EM is right there at 608.10. So you have confluence of the monthly expectations of August and next week's lower expectations. So if price were to stay below the declining 5-day moving average, as it is currently right now, below a declining 5-day moving average and below a declining all-time high VWAP, this would be the levels to potentially watch for. Okay, I don't know if it's going to go down there by tomorrow, by the next day, by the week. I don't know. But I do know this. From a daily perspective, the market's saying we have about a 68% chance of coming here and or there. Now, if we come up here to about 628, Where is that in confluence with? The all-time high VWAP that is currently declining, and it would be still below a declining 5-day moving average. Okay, so for whatever reason, if we start to bounce up, watch these areas up here and pay attention to see how price navigates through it very carefully. It doesn't mean that we can't go up higher, maybe close the gap, right? But you want to see the all-time high VWAP start to flatten out, turn up, and price to hold and show strength to feel more confident that this was just a shakeout type move. If we get rejected and pushed down and we ultimately create a lower high, that is opening the door to these lower marks there on my screen. Let's take a look at some of the intermarket charts going on. On X, I posted that this 10-year yield and the Bollinger Band width down here was getting very tight, levels that we haven't seen since earlier in 2025. But if you were to pay very close attention to just how tight this was, we haven't seen the Bollinger Bands this tight since the year of 2018. And why I show this is because Bollinger Bands, they're just highlighting periods of contraction and expansion. It's a very quick way to visualize that, especially looking at the width. When they get tighter, when the Bollinger width goes down, like this it is right here, it's telling us that the bands are moving closer together. And one of the basic principles of technical analysis is things move between contraction and expansion all over and over again. People get excited, things go extreme, then they calm down, people forget about them. All patterns, to some extent, do the same exact thing. So what was the cause of the trigger of the expansion that's most likely taking place right now was, well, we had the jobs data, we had the various narratives that can cause the triggers, but take a look. Right thereafter, we had the 10-year yield see an explosive move to the downside at 3.21%, closing at 4.22% on the 10-year U.S. Treasury yield. Oil also came off about down to 3%. So continue to watch this because as it stands right now on the very shorter term, we do see a series of higher lows. And I mean, I would consider this a lower high right here, but in the very near term, you do technically have a higher high right here. So we'll see if this low is taken out or if it kind of hold the 50-day and energy and oil want to go ahead and head higher. The dollar also made a very, very strong move. We've been looking for a bounce to take place. The bounce happened. We broke this trend, and now we're coming in for the back test, but overall a very strong move down in the dollar, which, could be, if this continues to the downside, good for risk on assets as we've seen prior, where the market or the dollar has been going down and has been very positive for risk assets. Copper, as we previously stated, has already made a gigantic move. Remember, when you get very strong moves in any type of direction, they're very well frequently matched with a counter trend bounce of some sort. So for example, when we saw massive volatility here, we saw a counter trend bounce here before heading lower. With this, I would only imagine that we're going to see some sort of counter trend bounce in the very near future with copper. If you take a look at the Sailor to Shift tool, Bitcoin came off a little bit here at around 115. We're still on a buy signal and buy trigger in this current moment. If we have a next week close under here, that would be the sell signal. And then we start to look to see if this current week's low is taken out, which it just has not been obviously yet. We need this weekly candle to close. If you take a look at the daily chart for Bitcoin, still a nice breakout. We've been flagging. I was looking for a potential back test and or just break out of the flag. And I would say that this is kind of right around that back test area over here. So, bounce from here, that'd be cool. Or head a little bit lower and then come up from these times. When they become overbought, there will come a time where they come back to oversold conditions. Now, as of right now, this is not considered oversold on an RSI standpoint, but it's not far off. And then I would just pair this with just understanding that this is still relatively high reading looking back on the BPCOMP. So, this could stay oversold for a while if this wants to come in further. The BPNYA, this is the 90 bullish percent index. We did move into an oversold condition after building out this bearish divergence. Still not really a low reading by any means here on the BPN and the 90 bullish percent index. For the technology sector index, also moving into that oversold condition, but still relatively well off any kind of extravagant lows from a percentage basis there, looking at that chart. BPNDX moving into an oversold condition here. Still, it's the lowest reading that we've seen since April, but still relatively holding up high. So we'll continue to kind of track that and see what it does. But just be aware that we're now moving into the oversold condition, and I like to look for bullish divergences to take place. BPSPX also moving into an oversold condition off of basically one down day. Where are we here? About 55%. When you cross down through 70, it has proven to be somewhat bearish, not for long periods of time, not necessarily, but just understand that when you cross down through that, it's typical to see weakness, and we saw weakness, and now we're moving the RSI into an oversold condition. This is the CBOE options equity put to call ratio, not the total put to call ratio, but the options equity put to call ratio. And I like to watch this 0.75 when you apply a 5-period MA, because if you get above it and you start crossing down below it, it's actually marked out kind of bullish turning points in the markets. You can see these both the little spikes over here. And even here, it didn't quite reach up to it, but as it started to turn around, that marked a pretty bullish move. And we're up here near 0.7, right? The last time we were up at these levels was right here, and then it started to turn back down and we headed higher. So just understand that it's working off these kind of conditions from being very, very extremely bullish. And now I'm looking for more bearish readings to become more bullish, take the kind of contrarian view there. Now, this is the NASDAQ composite divided into the total put to call ratio. Yes, the total put to call ratio. We apply a couple moving averages and we look for them to cross over. And you can see we're still on the buy signal from back here, and the market's been kind of heading higher. This is a very laggy indicator, but sometimes it catches on to the bigger trend. So the last sell signal was here. We went down, we went up before our first buy signal. The buy signal, we went up. And well, they are getting close, but we still haven't kind of crossed over yet. So we'll monitor that and see what happens in the near future. The Nasdaq McClellan oscillator, you can see down here, is moving into more of an oversold state off of basically just one down day. But leading up to that, we had the parabolic SAR for the last 4 trading days tell us to, hey, be aware there could be a potential change in trend. Just like here, we saw a potential change in trend, and well, the market started heading up higher. We got a bunch of whipsaws here. You had a bullish signal there. Boom, it headed higher from that point, and so forth. So it gave us some insight to be aware. Well, now it came in, so now we can start to see if oversold levels start to work themselves off, and this starts to turn back up and give us a more positive buy signal. The NIMO, this is the NYSE McClellan oscillator. I like to look at the traditional calculation. This one's not considered
And
oversold
3CR0
looking back
plays is
through
now
history,
live.
but when it does get oversold,
Streaming
you want to pay
Fortnite.
attention to those
The
levels,
Aint on my
especially
league
if you're
/
short,
listening to
or
Stocks
if you're
Talk.
trying to start a new short position. You know, it's better not to do it at an extreme level. If you look at the NYSE McClellan oscillator traditional calculation, it's typically when you get to around 250 where you get more of an oversold condition. But as we've been stating here, we've been watching this bearish divergence build for quite some time. That's just telling us that price action's heading higher, but the internals are weakening, and well, price finally caught down to the downside, resolving that divergence. So now we can watch for bullish divergences to form or potentially oversold conditions. So we got a lot of different signal charts giving us these readings. They're working themselves off of overbought conditions. We knew that things were getting frothy. Many people didn't want to believe that, but if you pay attention to the market conditions, we are in an environment to see, as we stated here, many small up days, but watch for volatility. As we stated here, many small up days, but watch for volatility hit. It doesn't mean the end of the world's here by any means, right? A lot of people are calling this the top. This could just be a shorter term top. 5 to 10% pullbacks multiple times in the S&P 500. This might be one of them, so we'll continue to track it. Hope that helps. See you on the next.
You know what I'm sick of? I'm sick of sitting. Sick of it. Oh, that's not going to work. We're going to kind of approach it from a unique perspective. Okay, and really this is going to be my thesis defending leaps, because I love them. Let's not waste time. Leaps, they are long-term equity anticipation securities, and the P in that acronym comes from anticipation, which is kind of weird. It's a very fancy way to describe an option that is traditionally very deep in the money and has a very far out expiration. For a leaps call, it is very similar to owning 100 shares of the underlying stock. If you think about it, a leaps call that's very, very deep in the money is going to have a delta pretty close to 1. Okay, and that's per share of the 100 shares. So in other words, it's you got 100 deltas, as they might say. If the underlying stock rises by $1, you'll make $100. What's the delta of a position with 100 shares in it? Well, for each share, you're going to have a delta of 1. The stock goes up by $1, you make $1, and there's 100 of them. So you're going to have 100 deltas. It's almost the exact same. So a Leap's call is very similar to owning 100 shares of the underlying stock, except for you use a fraction of the buying power. And therein lies the benefit of Leaps. The buying power is reduced, but you're leveraged out the tits.
Object to the tits!
What's the drawback? What is the drawback of Leaps options? Well, you might be thinking it's a call option. You know, if it expires out of the money, you lose all the money you put into it. But that's too simple. It's too simple of a way to approach it. There's only slightly more risk with a Leaps call than owning 100 shares of the underlying. Just slightly. And actually, there might not even be more risk. It actually could be safer. And we're going to discuss that. So if you own 100 shares of any stock, I think by the end of this video, you might seriously be questioning why you wouldn't just switch to a Leaps call option. Unless you had a ton of gains and you sold and you owed a bunch of taxes when tax season comes around. But you get my point. So let's dive in, or leap in. Jeez, I missed an opportunity. Okay, so we're going to be looking at this 60 strike call. Okay, we're looking at Apple, and its expiration is on September 16th, 2022. The current share price is $127.88, and we're looking at the 60 strike call. All this information tells us it's a Leaps. Okay, it's very, very deep in the money. The delta is pretty close to 1. It's at 0.95. Its expiration is 9 months or more out in the future. In fact, it's like a year and a half, almost 2 years out in the future. Look at its theta. You're losing 50 cents per day to own this call option. It's a lot less than most options that you could buy. What I'm interested in first is the premium of this option. $69.40 per share of the 100 shares that the contract controls. Those of you who hate hearing about intrinsic and extrinsic value, and you got it. Please stop telling me about it. Look in at the buffer bar. You can skip this section, okay? For those of you who don't know or need a refresher on intrinsic and extrinsic value, don't go anywhere. This premium of $69.40 is made up of two things, okay? This price doesn't exist for no reason. The first is whatever you can exercise it for. If you have a call option and it's in the money, you can exercise for some value. And that value, that money you could get out of it by exercising has to be built into the options premium. Otherwise, you could just get free money. It wouldn't be an efficient market. If I had an option that was 10 points in the money, but I could buy it for literally a penny, and I exercise it, well, I'd make $10 per share of the 100 shares, I'd make $1,000, even though I paid a penny for the option. So you'd get free money if you could exercise an option, and the value you get by exercising was not built into the premium. So what could you get by exercising this call option? Well, we take the difference between the current share price of $127.88 and the strike price of this option, which equals $67.88. So this is the money you could get back when you exercise this option for each share that you can exercise for. So you get $67.88 per share of the 100 shares that the options contract allows you to exercise for. So in other words, this is just written in premiums terms. So if I write that over here, I'm saying that of the $69.40 of premium, $67.88 is given to it based on what you could exercise it for. Because you could exercise buying 100 at 60 and selling them all at the current share price of $127.88. This portion of premium is called intrinsic value. It's a portion of premium given to the option based on whatever you could exercise it for. But we haven't explained away everything, right? We've explained away $67.88 of this is uncapped. But your risk is defined. The max you could lose is $6,940, the amount you paid for the option. So because more time and more volatility means you can get deeper in the money for a defined risk, then there's some value given to the option based on time and volatility, and that is extrinsic value. The more time you have and the more expected volatility there is, the larger extrinsic value is going to be. And this is a portion of the premium that theta affects. This is a portion of premium that decays. It decays as time passes by the rate of theta, and at expiration, extrinsic value will be 0, and all you'll have left is intrinsic value. Okay, so these two things constitute premium of any option. Okay, welcome back, everybody. If you guys skipped ahead, we're all back in the same spot. One big happy family. Now, let me tell you why I love Leaps so freaking much. The risk between owning 100 shares and buying a Leaps option at the rate of theta, 27.88 down to 60. 27.88 down to 60. With this call option, what happens to our profit and loss if it drops down to 60? Well, what is our intrinsic value? What is our intrinsic value if the stock price drops down to 60? Well, we know how to calculate intrinsic value. We take the difference between the current share price and our strike price. But in this case, our strike price and the current share price are the same. There is no difference between the two. So our intrinsic value is 0. And if we're looking at this at expiration after all the time has gone by and we're basically in our worst case scenario, we have no extrinsic value left. Well, our extrinsic value, like I just said, is 0. In other words, we've lost the entire premium of $69.40. So we've lost $6,940. What is the difference between these two losses? It is $152. What is that equal to? It is equal to extrinsic value. So in any of these prices, any of these stock prices, no matter which one it is, the difference between owning 100 shares and owning a Leaps at expiration is extrinsic value. So in other words, extrinsic value is the premium you're willing to give up for the right to have a leveraged position. And you would expect that you'd make up that $152 because there's a reduction in buying power. The call option is much cheaper than owning 100 shares, and you can use that money to invest elsewhere and recoup that $152. I mean, if we think about the cost basis of each of these, the cost basis of 100 shares right now is 127.88 times 100, which is going to be $12,788. The cost basis of this Leaps is the cost of the option, which is $6,940. It's about half. Don't you think with that extra $6,000 or so that you've freed up by using a Leaps instead of owning 100 shares, that you can invest it elsewhere and recoup the loss of extrinsic value if you hold this option to expiration? Any day prior to expiration, your extrinsic value isn't going to be so low and your profit and loss will be better, such that you're giving up less and less of extrinsic value for owning a Leaps. The only time when you lose the full extrinsic value of an option is if you hold it to expiration or if you exercise. So the max extra you're willing to give up for owning a Leaps as compared to owning 100 shares is extrinsic value if for whatever reason you end up holding it all the way to expiration. And that is worst case scenario. Any time before that, your profit and loss is going to look better because you're going to have some extrinsic value still left. So how much have we freed up by using a Leaps instead of buying 100 shares? Well, we take the difference between the cost basis of the two. What do we get? We've got $5,848. What percent return do we have to get on this position to make up extrinsic value if, worst case scenario, we end up holding this Leaps to expiration? Well, we get our percent return by taking 152 divided by 5,848. We need a 2.5% return. Over the course of what? Almost 2 years to compensate for the loss of extrinsic value if we hold till expiration. Do you think that with this extra $5,848 you have freed up, that you might be able to squeeze out a 2.5% return, making $152 if, worst case scenario, you hold to expiration? Anytime before expiration, your profit loss is going to be better. You may not give up all that $152, but there is no difference between owning 100 shares and owning a Leaps, aside from the potential loss of extrinsic value. But the benefit is so big because your reduction in buying power means that in this case, we freed up almost $6,000 that we can invest elsewhere. We could buy another Leaps. Let's think about what happens if the stock price goes below 60, below the strike of our call. What happens? Well, at expiration for our call option, no matter where it is below our strike, because it's out of the money, because it has no intrinsic value, and at expiration it'll have no extrinsic value, any of these stock prices down here, our option's going to be worth 1 penny. You know, there might not even be anyone to sell to down there, but it'll be worth 1 penny. You can't lose more than what you put into the trade, and at expiration, that's any stock price below the strike price. So basically, below your strike at expiration, your call is basically worthless. You've lost all the money you put in the trade. What if you're owning 100 shares? Well, if you're owning 100 shares, if the stock price goes below 60, you're going to keep losing money all the way down until the share price hits 0, if that ever happens. So you actually have downside protection with the Leaps because below your strike price, you stop losing money. But if you were holding 100 shares, you would continue to lose money. So let me recap the benefit here. I'm very excited. With a Leaps, you get a huge reduction in buying power. Sure, you risk losing extrinsic value. That is the additional risk as compared to owning 100 shares, is that extrinsic value. But I would argue that you can recoup that risk, that extrinsic value, by investing your $5,848 elsewhere. Maybe into another Leaps. In addition, you have downside protection because if the stock price goes below 60, you can't lose any more money by expiration. And if it's before expiration, you still won't have lost everything you put into the trade because you'll still have some extrinsic value, even if there's no intrinsic value left, because it's out of the money. So you get a reduction in buying power. You are able to reinvest your freed money that you would otherwise have spent on those 100 shares and generate a return that could compensate the potential loss for extrinsic value or more. The real goal is that you make more, compensating for more than just the potential loss of extrinsic value, but you just make more money overall compared to holding 100 shares of this stock. And you have some downside protection if the stock goes below your strike price. You can't lose any more money if you're holding a Leaps at expiration. Once extrinsic value is decayed all the way off, you can't lose any more. So all in all, decayed all the way off, you can't lose. I almost prefer a Leaps option. But what about liquidity, you might ask? I mean, if we look at this option, the volume 0, okay, it has decent open interest, actually really good at open interest, but the volume 0, and if it gets deeper in the money, which is the goal of this call option, then it may actually see less and less liquidity. The deeper in the money or further out of the money an option is, the less liquidity there is, the harder it might be to get in and out of the trade. Well, who cares? Because we're already factoring complete loss of extrinsic value. So even if it gets super deep in the money and there's no buyers or sellers at all, at expiration or whenever, you could decide to exercise it and then sell the current market price. What will you give up? You'll give up extrinsic value. That's what happens when you exercise. You get intrinsic value out of it, you lose extrinsic value. And since we've already factored this in, we know we could probably generate a return to compensate loss of extrinsic value using our freed up $6,000. Who cares if liquidity dries up when we have to exercise? We are anticipating total loss of extrinsic value anyway. You should basically always be able to sell, but if in some case you are not able to sell with a leaps, it's not a big deal. You can just exercise it. There's barely any extrinsic value for deep in the money call options. Extrinsic value shrinks the further away you get from at the money. So with a deep in the money call option, your intrinsic value is tiny. So if liquidity dries up in the scenario, I'd just exercise, buy 100 shares at the strike price and then sell them at the current share price, extracting intrinsic value, giving up extrinsic value. But I'm not concerned about giving up extrinsic value because I've probably made a lot of money off of this leaps option on Apple that expires in nearly 2 years. And I've probably made some money off my $5,848 that I freed up by using a leaps instead of buying 100 shares. And if the stock price drops to 60 and my option becomes worthless, well, I could buy 100 shares if I wanted to and wait for it to rise and recoup my losses. Or I could just buy a leaps again. Who cares? Like I said, it's so similar to owning 100 shares that it's just in line with the thought process of long-term investors to buy a leaps option if our current leaps drops all the way down to $0 in value. In addition to all this tangled mess I'm looking at here, this strategy is so much better than the strategy that people on, say, Wall Street Bets use, where they buy out of the money option weeklies and buy a bunch of them and hope to get lucky. But of course, their break even is so high. Break even of a call option is strike plus premium paid. And because out of the money options have high strike prices, that means their break evens are very high. The stock price must rise a lot by expiration to compensate for the loss of extrinsic value. In other words, the stock price must get in the money by expiration and start building up intrinsic value that compensates the total loss of extrinsic value. But because out of the money options completely consist of extrinsic value and their strike prices are so high, they're just going to decay really, really fast, and the stock price has to go very, very high to start building up a concrete layer of intrinsic value that won't evaporate away through theta.
They ain't on my league /
In this case, we have so much intrinsic
talk.
value that it's like the exact opposite here. We have so much intrinsic value that won't decay away. Okay, it's dependent on the stock price, and we have a tiny amount of extrinsic value that the decay of it isn't that big of a deal. So we only have to compensate for a loss of extrinsic value that is very small, which means our break even is very low. Strike plus premium paid. Because our strike price is so deep in the money, it only has to rise a little bit to hit our break even by expiration. We just have to recoup this $1.52 to hit break even, but it doesn't really matter because overall it's just the extra amount we're willing to risk as compared to owning 100 shares. All right, here's $7,000 worth of out of the money options that expire in a week. Look at our break even. The stock price has to go super high in the next, actually less than a week, next few days to compensate for the total loss of extrinsic value, to get this option in the money and start building up that concrete layer of intrinsic value that will not decay. What if I choose an in the money option that expires way out for the same price, $7,000? Well, this is the closest I could get to $7,000 for AMD, but look, our break even is so low. It is so low, and we have like 2 years to get there. It's the exact opposite of Wall Street Bets. We don't care if the stock price goes today, tomorrow, the next day, if it goes up in a year from now. It just has to go up at some point compared to where we got in. While with out of the money options, that expired in the near future, you better hope the stock price rises quickly or your money is gone. This is the long-term investor's approach to options. I don't know why people don't do it more often. I think it's because it requires a little extra brain power. Or people look at the call option, this leaps, and they think, oh, it's a call option. I can lose all the money I put into the trade. But they don't think about how the risk is very similar to just owning 100 shares of the underlying, except you get to free up some buying power that can be invested elsewhere. The extra amount of money you risk by buying a leaps instead of 100 shares is extrinsic value if you end up holding the option to expiration. Before that, you're actually risking less because you'll still have some extrinsic value left. And if you think you could recoup that and more with the money you've freed up because of the reduction in buying power, then you should buy a leaps. Yes, down the road, 2 years from now, you're probably going to have to exercise or sell this option, and you're going to incur a taxable event. So that might be something you want to avoid. And yes, holding shares is simpler. You don't have to think about it so much. But I think leaps chosen well on solid stocks provide enough benefit to be justified. And because liquidity doesn't matter, because we have the ability to exercise, and we are already factoring in the fact that we could potentially lose extrinsic value, then liquidity doesn't matter. Liquidity doesn't matter because we have the right to exercise. So if you want to buy a Leaps option, choose one that's 9 months or more. Really, the more time you give yourself, the better. We want it to be a leverage position that's similar to owning stock, so we don't have to worry about expiration. And we want to own it for a year or more, because then we can have the long-term capital gains tax rate, which is lower than the short-term capital gains tax rate. We want liquidity to be decent because we prefer to sell and not have to give up all of extrinsic value if we can avoid it. But if liquidity dries up, it's no big deal. You can always exercise the option and accept the fact that you will give up extrinsic value. Choose it very, very deep in the money. It'll have a good amount of leverage because of that, but most importantly, it will reduce your break-even. The deeper in the money, the lower your break-even will be. Thanks for watching. If you want 4 free stocks right now, I don't know if, a year from now it'll be the same case, but if you want 4 free stocks right now, sign up for Webull in the description and deposit $100. There's also more free stock stuff down there as well. Love you guys. I'll catch you guys in the next one. Peace.
American dream is pretty much dead.
Hate to break it to you, but statistically speaking, you'll never be able to afford the American dream.
I should leave the United States. It is too expensive.
In the grocery store, at the gas pump, on the car lot, prices keep rising.
Yet 65% of Gen Z live paycheck to paycheck.
Notice August, these returns are not that spectacular. It is the 3rd worst month of the year.
Fire, so I get this email, disturbing. Like most emails, but then it goes from email. This is kind of how it goes in life. It's like, okay, from email to, because you can't write things, to Telegram, because my friends want these things called privacy. And I don't know how I got here. I don't deserve it, but these people are billionaires. And I'm always like, can I use that on the channel? No, you can't. Just wanted to give you a heads up of how we all die. All the information that was given to me, then I have to do due diligence and find, stories and things that people will actually report, like tidbits of the plan that they are orchestrating. Take, for example, like this. Trump will remake the Fed. Trump wants to take control of the central bank. Trump demands. Now, ahead of time, people tell me this is the game plan. And then I'm like, okay, can I tell? No, you can't. You have to wait for it to unfold. I say, well, how can I pull a Nancy Pelosi and everything that you give me just a little bit? What I'm about to show you is shocking, disturbing, but for the most part, sad. A lot of it you already know because you're the frog, you're in the water, you're like, boy, I'm really sweating here. Then at the end of the day, there is actually hope. But you have to, and I'm so sorry you have to be the 1%. No, I've been preaching this since the beginning of starting this channel. But in the end, it is the rich and the elites take all. And we have one side that is like, you will own nothing and be happy. Then you have the other side that like, we're gonna own everything and if you want to. So you may see things like on the news, federal agents at MacArthur Park. What are they doing all there? Oh, they're just going in to, being from California, just checking it all out, making sure everything's fine. No, these are it's all pre-planned, pre-done. They're going in, they're doing what they said that they're gonna do. This is not just to intimidate. This thing says it's a mock ICE. See, no, this is all real. This is all pre-planned. This is all going on. This will continue to go on. ICE, people not showing up to hospitals. So breaking news, I say it, then I got to show it to you. This is all planned. Look at this. Los Angeles residents reporting the emergency rooms are empty, completely empty. No one in anything. Gone. ICE, gone. Nothing. Nurses confirming. She's confirming it. She's like, I'm going to work every day, and there is like 4 people. She's actually concerned for the safety of probably her job. I mean, look at this, 12-hour shift, 4 patients max. Which leads me to the big picture is your job is done. The American dream is over. And this is how a civilization dies, slowly. These plans have been in place for a very long time. And the one side has one, and the other side has one, but in the end, we all die. Well, unless you work really hard doing everything opposite of what they've trained you to do. Guys, sorry, I was editing my video. I just realized I forgot to even mention that tonight My bull market watch list, last chance, $1 a day goes up, so grab it now. Back to me, whatever I was just saying. Keep telling you on this channel, I'm like, there is a tsunami coming. You have to paddle. You have to be paddling right now. As a surfer, when you see it, not a tsunami, whatever, it's a 20-foot wave. I don't want you to even surf it. I just want you to get over it. I remember taking my kids to Hawaii. They were like at this age. I was a horrible father. Took Jordan and Kayla out, and they were like this size. I remember a set coming in, and I'm like, okay, you got to paddle that way. I'm going to take this one with Kayla. Surf one wave with my daughter, leaving the other one back while CPS is waiting on the shore for me. All three of us also got severely fried, along with more poor decisions from a father, except for teaching his kids how to survive in life, which I'm trying to teach you. We were all fried severely. Remember going back and finding an olive oil plant, chopping it. It has to be this, cannot be the stuff you buy. I was slathering it on me, went to, I think it was Kayla.
You see a bunch of retards tried canceling Markiplier? People are really mad at Markiplier for something about AI.
Context. He used ChatGPT once and is now getting cancelled.
Let's ask ChatGPT. Hey, what would consume more water? The data centers that power you and your ability to answer my questions, or almond growing in all of California?
Almond farming in California uses significantly more water than data centers.
You're not just saying that because you're ChatGPT and you wouldn't want to be accused of stealing too much water, are you?
Nope.
I don't use ChatGPT anymore. I don't use it anymore because it was dumb. It was fucking stupid, and it started to piss me off. Absolutely. I talked to ChatGPT in that video itself. It was mostly as a bit to showcase how dumb it could be. But I understand when even just the mentioning of it could become something that people were offended by. It's like, we're on the same side. We're absolutely on the same side. I confess that I was the first fucking person to be sounding the goddamn alarm that it was bad. I was the first fucking person to say this is honey all over again.
Definitely. People are mad. The entire Archbar AI controversy just consisted of this interaction, by the way. What is this here? I hate AI. I don't care. The only way to improve it is to fucking get rid of it. He wants to make it better in a scientific way, like detecting breast cancer, not generative AI. And yet he is still using generative AI. He isn't and hasn't for months. You would know this if you watched it. I was under the impression that he had used it recently. Oh, so I was just making things up randomly. There are tons of uses of AI that don't put furry artists out of a job. Generative AI for artistic means is not the only type of AI that's ever been invented. Why are people so against AI? This is the Industrial Revolution 2.0. A lot of people that are artists are against AI because it puts their jobs at risk. People getting mad at Markiplier because of AI. Again, this is another example of teenagers on the internet that are getting mad about things that they don't really get. AI is used for all types of medical advancements and medical detection and stuff like that. Nobody's complaining about that because people don't even know about it. It's a lot more salacious and interesting to talk about AI generating an anime girl with big boobs, but that's not really the only use case for AI. Like, let's be fucking honest, right? Asmon, stay with us. What's this? K-pop has claimed another one. I've seen this on Twitter. Yeah, we've seen this on Twitter, absolutely.
From one user going from broke to millions and back down to broke in a month, to another user YOLOing his dad's money, we're gonna go over the maddest Wall Street bets trades of the meltdown. RobBoost330 is a user who decided that he was gonna YOLO his portfolio every day and became so attached that he couldn't stop. Disregarding Rob's first ever post on the Rise of Kingdom subreddit, he made his first post to Wall Street Bets on May 14th. With SPY and QQQ, his portfolio grew 178% in the past week alone. But don't get too excited just yet, because he was still down over 7K all time. For some reason, Helipad668 thought that this post was some sort of CIA government conspiracy and said, "If any of you believe these game posts here, you are a low IQ idiot." Rob got back saying, "This ain't fake, boy. His $50,000 portfolio was now worth $25,000 a day later. Despite Rob's 50% fall in a day, Helipad668 still for some reason couldn't believe someone could make lucky or unlucky trades. Over the next few days, he luckily worked his way back up to $56,000. After finally breaking even on Robinhood, some would say that taking a break from trading would be wise. Rob woke up that morning and got ready for his day at work like usual. Work was starting soon, but Rob wasn't really worried about that just yet. He instead was getting ready to YOLO his entire portfolio on 0DTE QQQ calls. He threw $48,000 flat into calls at the $520 strike price. The stock opened in the red at about $515 a share, and of course, if things didn't take off soon, Rob's money would be gone forever. With some sort of financial wizard spell, QQQ hit his strike price in just about half an hour. His $56,000 portfolio jumped to $98,000. If you think a 75% gain is enough for him, then you must be out of your mind. Rob was fully dedicated to striking it rich. Kinda like Elon, I love you. He says he's currently using his paychecks to YOLO his way back into the green after going negative on margin and taking a break. He made it clear that 1 million was the number that he was going for. He also let us in on his secret trading strategy. You might think that these are all jokes, but Rob is dead serious. He took a 4-day break from posting, but not from trading, and broke into 6 figures. It was May 23rd, and Rob immediately threw $28,000 into 0DTE QQQ calls, and was initially in the green by a few thousand, but by lunchtime, he was down almost 20K. Rob averaged down not 1, not 2, but 3 times, tying up a total of $105,000. He only had $500 in buying power left, so if these trades didn't pan out the way he wanted them to, he'd be flipping burgers forever. Luckily though, QQQ's dip was short-lived, and he sold for a $70,000 gain. Rob went from 25 to 190K, and we've seen a situation like this 1,000 times. Rob was not gonna give up just yet. Rob says that instead of setting stop losses, he just, watches the stock and prays. The weekend came along and gave Rob some time to reflect on his actions. And after reflecting long and hard, he was back to business. That morning, he YOLO'd into, once again, QQQ calls and SharpLink gaming stock as it started rocketing. SharpLink actually 5x'd that day, and QQQ was also very strong. He posted another win for Monday market. The only issue was that it wasn't Monday. Apparently, Rob was partying a little too hard over the weekend and just skipped over Monday. Anyway, days of the week didn't really matter all that much because he may not have known it yet, but the following day would be one that would go down in history books. He threw everything into QQQ Monday. Apparently, Rob was partying a little too hard over the weekend and just skipped over Monday. Anyway, days of the week didn't phew! That $267 he had on the sidelines was definitely not gonna hold him over. Rob now had almost $300,000 in his portfolio. He could easily just invest in an index fund and make some pretty solid passive income that way. But Rob was not dumb. He wanted to YOLO his whole portfolio every day because, quote, 15% of small money is small gains, while 15% of everything is a great day if green. He isn't rich, but also isn't worried about losing his money because he plans on staying lucky. That last sentence may foreshadow some bad, catastrophic events, just saying. Over the course of the next week, he grew his portfolio to nearly $550,000, 55% of the way to his big goal. He threw everything into more 0DTE QQQ calls, and hey, if this play doubled his money, he would make it past $1 million. But lunchtime rolled around and QQQ dropped nearly 1.5% in just over an hour. Rob was left with this. He may have been down 90%, but he figured that he was just gonna let his calls run on autopilot. Somewhat luckily, QQQ rebounded a decent amount by the end of the day, but not enough to take him back into the green. His $497,000 loss got cut down to $300,000, so that means he should still have about $250K left in his portfolio. And that's all the updates we have up until June 3rd, so I guess we'll just have to wait and see how the rest of his story plays out. I thought the story was over, but on June 6th, Rob came back to the subreddit with this screenshot. During his 3-day hiatus, Rob was making profitable trades and kept them all to himself. But now, he flew past his $1 million goal and couldn't stop himself from spilling the beans. Rob went from 25K to 500k, back down to 250k, then straight back up past $1 million. Do you guys think he's gonna keep his million, or do you think he's gonna end up losing it all, similar to another
and
person we've talked about
3CR0
before?
plays is
This
now
just
live.
goes to show that you gotta
Streaming
drop a like and
Fortnite.
subscribe
They
for
ain't
Rob's
on my
level
league
of luck
slash
on your
listening to
next trade.
Stocks Talk.
Seriously though. MoistAd9060 also went on a pretty lucky options trading spree, but may not have had enough luck to keep it. MoistAd originally started with 15k, but unfortunately, the early part of his journey didn't really get posted to all, similar to another
And
person we talked
3CR0
about
plays
before.
is
This
now.
but wasn't ready to sell his contracts just yet. He held on to all of these overnight and hoped for the best. Particular base 3390 said, "Road to bankruptcy. Hope you aren't too attached to your kidneys." And Soulful Academics pointed out that he needed to chill out. MoistAd replied with, "Yeah, I realized I was a bit exposed when I took a 122k loss yesterday. Got saved today. Starting Monday, I'll chill." Good thing today was Thursday though. He still had another day of not chilling tomorrow. I-Chan San seemingly unironically says, "Where can I start?" Anyway, MoistAd went to sleep and got ready for his last day of wild trading. He woke up in the red, which is never pleasant, but was only down 2.5%, so it wasn't the end of the world. He opened some new 0DTE Tesla puts and 0DTE QQQ puts and closed out his TQQQ calls. He was now full bear mode. He even made the prediction that QQQ would drop 2% that day. Well, by lunchtime, the market was still alive and well, and MoistAd's portfolio was iffy at best. Down 22k for the day with only 12,000 in buying power left. He was hoping for a reversal any second now. A few more hours went by and he was down another 16,000. QQQ finished the day up almost 2%, which is basically the opposite of what he predicted, and his whole portfolio was down $48,000. A lot of users talk trash, but MoistAd told them to calm down. He's learning as he goes, and if he does say so himself, his year-to-date return is pretty darn good. Monday rolled along, which meant that it was time for him to chill out on the ridiculous trades. Did he chill out? Let's find out. As of April 15th, he was down 153k over the past week. To top it all off, he wasn't gonna cut any of his losses. He held on to all of these contracts through the night. MoistAd may have cut his portfolio by about 2/3 from the peak, but he was still pretty motivated to reach his $1 million goal. In fact, he said that this would only delay the process by about 2 to 3 days. Except after that, MoistAd stopped giving us updates. No more posts were made to Wall Street Bets until he suddenly came back 50 days later with some pretty abysmal news. MoistAd's portfolio went from 15 to 353k, then straight back down to 16k in 2 weeks. MoistAd said, "Never thought I'd be making this post, but here we are. Within 2 weeks, I went from $300,000 to PDT violated, margin called, and spiritually humbled. I'm not gonna lie, I was considering launching a hedge fund. Called my dad, called my rich uncle. They were shocked, surprisingly supportive while I was winning, and started to discuss hedge fund possibilities. Turns out I wasn't a quant. I'm a changed man, but also a scared one, but it's okay. I started my true bull journey yesterday. Give me a month or two once I clear this PDT Scarlet letter, and I'll be back. Or not." This post was made on June 4th, so we'll see if MoistAd ever gets his revenge and if his hedge fund comes to fruition. When living in uncertain times, hedging your bets can be a wise move. And with platforms like Kalshi, you can trade on real-world events and can actually use the platform to hedge the positions you have in your stock
Streaming
portfolio.
Fortnite.
Kalshi is
They
the
ain't on my
first legal
league slash
platform in the
listening to
US where
Stocks
people
Talk.
can trade on events in all 50 states. You can trade on things like whether or not the Fed will raise interest rates that month, when Trump will end his tariffs against a certain country, and if you're really going for a wild card, on whether or not Elon will rejoin the Trump administration. Kalshi gives you an interactive chart that lets you see how the odds of a given event have changed over time, which is honestly kind of just cool to see even if you're not going to place a trade on it. And if you weren't already aware, even Robinhood has partnered with Kalshi. On top of this, the first 500 people who sign up using my link down below in the description will get a free $10 credit after placing their first trade. So why not sign up and see what you can do with your bonus? If You Say So is someone who lost a pretty big amount of money and made the realization that the only reasonable course of action was to revenge trade to make it all back. Maybe not so successfully though. On April 22nd, If You Say So was looking for his next golden goose trade that was gonna get him out the $40,000 hole he was in. A couple hours into the trading day, he scooped up $70,000 worth of 0DTE SPY puts. Pretty quickly, his puts went up about 5K, which was nice, but still a far cry from the 40,000 he wanted. He put his phone down and went to get some breakfast. Little did he know, this was a detrimental mistake. In just a few minutes, SPY jumped from $524 to $527. He put the Nvidia bytes down and opened his phone to realize that his $75,000 position was now only worth $20K. Instead of profiting $40,000, he lost 48. He said, "What in the actual F? I belong." The best part of it all was that he sold at literally the worst time to sell at throughout the whole day. F. The contract is up 1.6 now. I hate you guys. Instead of selling for 20K, he could have sold for nearly 90,000 if he held just an hour longer. Year to date, he's down 150K, and it doesn't exactly look like the chart is moving in the right direction either. Apple Snapple Tart is someone who used to frequent the Pokey Investing subreddit, but switched over to Wall Street Bets and blew everyone out the water. Apple Snapple Tart started his trading journey with a measly $437, but do not count him out. He was willing to make the most degenerate trades possible to grow his account. On April 30th, Microsoft was trading at $395. They were reporting earnings after hours, so he maxed out on 2 different out-of-the-money calls, with one of their strike prices being out of the money by about 10%. It was very likely his account would go straight to zero tomorrow morning, but Microsoft completely knocked it out the park. With the stock flying 11% overnight, Apple Snapple Tart's portfolio went from $437 to Microsoft was trading at $395. They were reporting earnings after hours, so he maxed out on 2 different out-of-the-money calls, with one of their strike prices being out of the money by about 10%. It was very likely his account would go straight to zero tomorrow morning, but Microsoft completely knocked it out the park. With the stock flying 11% overnight, Apple Snapple Tart's portfolio went from $437 to $7,800. This was an absolute lotto ticket play, but for some reason he felt like YOLOing everything he just gained into yet another crazy options play. On the same day, he threw $7,500, which was basically everything, into calls on HIMS that expired in 2 weeks. Except this time, the stock price had to double for him to even be in the money. If HIMS didn't double in price over the next 2 weeks, all of these sweet gains would be turned to dust. Regardless, the stock was trading at $36 on May 1st, then $41 on May 2nd, then $42 on May 5th, then boom, $50 on May 6th, and $52 on May 7th. 6 days had passed, and the stock was somehow up 44% already. That was great, but it still needed to rise another $18 to be in the money. Except Apple Snapple Tart wasn't going to wait around any longer and sold for nearly $22,000, 3xing his money. So far, this user went from $437 to $22K, and for some reason, he still wasn't satisfied. He quickly threw everything into a mix of SMCI calls with wildly different strike prices, some of them once again needing to double to be in the money, and AMD calls that, like all of his other plays, were also insanely at the money. Anyway, it was the middle of May, and Apple Snapple Tart was ready to reveal his progress. Thanks to SMCI and AMD, his portfolio was no longer worth $22K. It was now worth $121,000. He was up 10.8,000% over the past month, so by this point you would expect him to be done trading for good. But he wasn't. He decided to hold on to both of these positions. Both of these companies have stayed completely flat since he posted, but he never updated us with whether or not he sold. If he didn't, it could very well likely be back down to zero, which starts to look a whole lot more likely when looking at his all-time chart. Dr. Dankelberg is a user who was investing money for his dad and almost lost it all. Dr. Dankelberg hasn't posted very much to Wall Street Bets, but the post that he does have is quite his all-time chart. Dr. Dankelberg is a user who was investing money for his dad and almost lost it all. Dr. Dankelberg hasn't posted very much to Wall Street Bets, but the post that he does have is quite insane. Dr. Dankelberg, on May 14th, he YOLO'd everything into out-of-the-money United Health puts that expired in 2 weeks. The stock was already down 47% over the past month, so Dr. Dankelberg assumed the fall would continue, cause if not, his dad was not gonna see that money ever again. Miraculously though, the following day was another catastrophic day for the stock. It fell over 11% for the day, and his dad's $5,000 balance quickly grew past $30,000. Dr. Dankelberg waited a bit past the peak, but still walked away with a $26,000 gain for the day. Shaq Swaw made enough money to buy a house in a day due to unforeseen circumstances. So far, Shaq's only has 2 posts on the subreddit, but he made sure not to waste any time. It was June 2nd, and CoreWeave had multiplied in money over the past few months. Some people think the stock's rally is a bit undeserved, but that didn't matter because it didn't look like it was going to stop pumping anytime soon. That being said, Shax threw $9,200 into calls that expired a few days later. He didn't have to wait very long, and here's, according to him, the result of the gambler's skill combined with luck. He was up nearly $59,000 that day, thanks to the stock's 8% rise. These calls still had 2 days left till they expired, but Shax, unlike a lot of still had 2 days left till they expired. Other users on Wall Street Bets didn't want to push his luck. He sold and locked in a $60,000 profit. And thank goodness he did, because the very next day, CoreWeave fell almost 20%, which would have put him down by more than $45,000. These CoreWeave calls really blessed him up, but Shax had another position in his portfolio that was ready to catapult even harder. He woke up on June 5th not yet knowing that it was a big day. Elon Musk and Donald Trump were no longer on great terms, and they were making it public. This is great news for anyone holding Tesla puts, and Shax just so happened to be that guy. Elon Musk did the unthinkable. He talked smack about the big, beautiful bill. Trump was very disappointed and said, "Look, Elon and I had a great relationship. I don't know if we will anymore." Tesla was down 9% by the middle of the day, but things were just getting started. Elon Musk said, "Without me, Trump would have lost the election. Such ingratitude." Trump fired back with, "Elon was wearing thin. I asked him to leave. I took away his EV mandate that forced everyone to buy electric cars that nobody else wanted, and he just went crazy."
And
The final nail in the
Plays
coffin
is now
that
live.
sent the stock even lower
Streaming
was when
Fortnite.
Trump said that the
They ain't
easiest
on my
way to
league
save
/ listening
billions
to
and
stocks
billions
talk.
would be by terminating Elon's governmental subsidies and contracts. By the end of the day, Tesla was down over 14%, and Tesla bulls had nothing left to eat. Tesla bears, though, like Shax, were blessed with $250,000. Trump ended things off with, "He hasn't said anything about me that's bad. I'd rather have him criticize me than the bill, because the bill is incredible." Shax wasn't the only one who was in on Tesla though. Useful Wishbond 6695 took $140 to 9.8K in a day. Casper took $114 to He hasn't said anything about me that's bad. Me than the bill. He was in on 100 13 points took, and also had a 12.5 gain the day before that. And Blackline Strategies is a bull that wants to know what's going on with his calls. Rough Resource 2900 came to Wall Street Bets with only enough money for a PS4, but ended up doing the impossible. It was May 2nd, and Rough Resource had a Webull account with only $300 in it. Despite his low balance, Rough Resource had hopes and dreams, and the way to success was Google. At least that's what he thought. He threw everything he had into Google puts that expired a week later, and it needed to fall 10% fast or else his puts would expire worthless. Eventually, there was only 1 day left till his puts expired, and the stock was still $15 away from his strike price, so basically his puts were worthless. But suddenly, on the day of expiration, Apple came out with news that was not very pleasant for Google. The stock fell 9% in just under 2 hours, and Rough Resource sold his puts for a 3,200% gain for the day. Going from $250 to $6,300 in a week is a jackpot and a half, but Rough Resource wanted to push his luck even further. He took a break for the week, but immediately sprung back into action on May 15th. Google was pretty volatile, and he wanted to stay loyal to the stock. Except this time he was done being a bear. He threw everything into Google calls, besides the $210 he had on the sidelines, and hoped for the best. 24 hours later, he opened up Webull to see he was up 550% for the day. With just under $32,000 in his account, most people would think that it's time to walk away, which he was actually going to do, but not before one last YOLO. The same day he sold his last calls, he bought even more, but this time at % for the day. With just under 32, people would think that it's time to walk away, which he was actually going to do, but not before the same day he sold his last call, the $175 strike price. Google was $3 away from could happen within that week that the stock hit his strike price and still had 2 days left till expiration, and he ended 83K. He was finally ready to call it quits. Kinda. He decided that he was gonna cash most of it out and leave 25K to trade with. He was also gonna pay off his debt, double check that he was subscribed to Yummers, and buy stock instead of options. How is a self-proclaimed fool porter who's ready to live and die by the YOLO. He made his first post on April 16th with the title, "What do I do to minimize my loss?" We can't see the screenshot he added since the post got deleted, but usually questions like that are not good signs. Anyway, he followed up with another post showing his $700 unrealized loss on his Tesla call. These are baby numbers though, so let's flash forward to May 9th. How had $2,300 in his Robinhood portfolio, and he was still eyeing Tesla. The stock had been picking up momentum over the past few days, so he figured he may as well bet the whole farm on out-of-the-money 0 DTE calls. Elon was feeling good that day, so the stock went up 5%. How's portfolio blossomed 308% for the day, and he now had $9,300 ready to go. Kylo Zen ATX said, "I wish I knew what any of this was." And How replied with, "Don't worry. I just learned it like last week after hours of video on option trade Dinga, and apparently he's dead serious." 3 days later, he was up 35% for the day thanks to SPY. With only $29 on the sidelines, he desperately wanted to know if he should sell or continue holding. Over the next 2 days, he went on a trading rampage and broke past 30K, but by the end of it, he was back down to 14K, with most of his money in United Health puts. He also took a pretty ginormous loss on SPY. Everything that has happened up until this point is pretty crazy considering he started with just 2K, but things are about to get life-changingly crazy. He held onto his United Health puts, and the very next day, the company was hit with an investigation into Medicare fraud by the Department of Justice. Pretty bad times for the company, but splendacious for How. He opened up Robinhood that morning, and as the trading bell rang, his account rocketed from 14 to 125K, and best of all, he actually sold and locked in profit. And thank goodness he was going to use this money to continue making smart investments. 1 day later, he YOLO'd up on 200 SPXW contracts, but never gave us an update on that. On May 22nd, he continued his wild trading spree. He made a pretty quick $1,400 gain on Gap, but also threw about $10,000 into 1 DTE SPY puts that initially weren't going so well. Pretty quickly, $2,500 was chopped off his portfolio. Things didn't get any better either. The market rallied higher and higher, and by the end of the day, SPY was just over $10 away from his strike price. A lot of users started doubting him. "These are already worthless, lol. Good luck with your Wendy's application. Thanks for donating your money to the cause." By the end of the day, these calls were down 80%. Then, all of a sudden, Trump recommended 50% tariffs on European goods, which didn't sit well with investors. At open, SPY fell about 2% from its peak at close yesterday, and How scrambled to sell his puts. And just like that, he got his hands on another $14,000 in profit. How went from up 3K to down 8K to up 14K, and haters were fuming. A few days later, How was yet again feeling like an eager bear. He threw $13,000 into way out of the money United Health puts that expired 3 days later. A few hours into the day, his puts were already down $4,500, and he was starting to wonder if he made a mistake. Some people clowned him, saying things like, "Buying puts on a company that's already lost half its market cap. Dead emoji. Wait, never mind. Yep, right sub." How didn't give a hoot though, cause what they didn't know was that he was also holding 0 DTE SPY calls that were rocketing. SPY flew 2% that day, and How day traded these calls for a $16,800 gain. The following day, he lost a total of $4,700 on a mix of 2 DTE SPY and Nvidia calls. He posted a $3,600 gain with his SPY puts 2 days after that, and his final post was made on May 30th, showing off a modest $1,100 gain. Legitimate Space 8847 has had his fair share of ups and downs over the past 3 years on the subreddit. His first relevant post on Wall Street Bets was made over 3 years ago. Legitimate Space installed a Robinhood update, and when he opened up the app later that day, he was greeted with some unpleasant news. With an account deficit of $230,000, things were not looking good. He got rid of the deficit, which is good, but came back shortly after to share another not so pleasant screenshot. Down just under $21,000 all time, Legitimate Space needed to reevaluate his strategy if he was gonna ever leave Wendy's. But then, he went silent for a whole 2 years. Just because he wasn't posting on the subreddit didn't mean he wasn't trading though. Over this time period, he lost even more tens of thousands of dollars. There was a moment of sunshine though, and he made sure to make it public. He shared his $21,000 gain for the day thanks to AST Space Mobile. He followed up last summer with even more good news. His portfolio was up 422% over the past 3 months and was now worth $86,000. At the end of 2024, he shared another gain, this time $9,700 with SPY puts. But this is where his luck starts to run out again. Back in January, he got himself into another account deficit. This time it was $588K instead of a measly $230K. At the end of February, Legitimate Space was feeling very bullish on Tesla. He threw $70,000 into Tesla shares and calls. Things were off to a rocky start though. His shares were down $10,000 and his calls were down $1,800. His options may have been expiring that day, but so what? He could just buy more, and his shares, those were keepers. But 10 days later, things were still looking pretty grim. He was down at least another $14,000 since last time, and said, "I want to go home." A now deleted user asked, "You're still holding?" And Legitimate Space responded with, "Till my last breath." Then he went on another couple month-long hiatus. Finally, he returned on May 28th with, "You all told me to sell, and guess what I did?" He really did hold through thick and thin, and his shares were now up $6,600 instead of being down $20,000. Y'all have taught me a lot, but one thing I refuse to do is follow the advice that people give here. Ironically though, this post was made only a week before Elon and Trump followed the advice that people give here. Ironically though, this post was made only a week puked it out. Fourth, he said, "I am about to puke." Spellbreaker has been posting on Wall Street Bets for a few months now, but his craziest trade of all time didn't happen until this past month. With United Health being a pretty hot topic for this video, Spellbreaker was yet another person who felt extremely bearish on the company, except he undoubtedly outdid everyone else. On May 12th, he spent $720 on 4 DTE puts that were 8% out of the money. By now, we all know United Health crashed, but just take a look at the point he bought these puts. Unbelievable timing. The next day, his $720 puts 31x'd and he sold for a nearly $22,000 profit. After this, Spellbreaker took a break, but not for long. After only a day of waiting, he got back into the game and took another look at United Health. Despite the stock's 19% drop in 2 days, he still felt like it was doomed to keep falling. 2 hours into the trading day, he scooped up 80 contracts for a grand total of $5,600. The stock needed to fall 6% within the next 2 days, or else his contracts would of course expire worthless. But once again, he somehow picked the perfect time to buy and woke up to another 30x gain the next morning. His puts that were worth $5,600 the day before were now worth $160,000. I mean, just going back and looking at the chart, timing doesn't get much better than this. 8 days after that, he turned $2,400 into $17,000 with 1 DTE Google puts with, once again, seemingly perfect timing. Bondas32 is someone who hasn't had very much luck throughout his trading journey. He showed us a screenshot of his Webull portfolio, which has a pretty big amount of money in it, most of it in cash. But Bondas was a failing trader, which is why he asked everyone, "Is it possible to make 1 to 2% a day with my account? It's down like 800k, but this is what's left." Bondas' $1 million portfolio was sliced down to 200k, and he was still wondering if it was possible to 12x his money in a year. People told him things like, I don't know, maybe stop doing options and random gambling? He said, yes, just stopped today. Thanks for watching. Make sure to like, subscribe, and comment who had the craziest trade of the meltdown.
Gather around, team, and let's share a story of one of the bravest and most rewarding trades to ever cross our path at Wall Street Bets. Every trader to indulge the WSB lifestyle suffers the same elusive dream: to become so rich off a special trade that generations of wealth are created in one fell swoop. Many a time we've seen traders reach heights in the upper 6 digits, only to subsequently lose it all and agonize in the crippling loss of watching their wealth burn to ash. But today, that changes. Only to subsequently lose it all and agonize in the crippling loss of watching their wealth burn to ash. But today, that changes. It is my honor to bring you the story of Hollicisms, one of our own, a man who rose from humble origins to make over $7 million within the span of 1 month. A man who will spend the remainder of his life living in abundance and opulence. Living, to say it honestly, our dream. But where did this man come from? How did he make so much cheddar? And how can we also achieve that level of bag? Let's toss this salad, fight tactics. And like so many gamers, he one day decided enough was enough and he needed to lose weight. So he sought weight loss consultation on various Reddit boards on and off since 2018. Part of his weight loss journey also includes multi-week water fasts, which sounds very stressful. The takeaway here is, any one of us could be Hollicisms. His origins are much like many of ours, and as such, I mean it when I say he is truly one of our own. But all that changed in 2021, a year when our hero's life got flip-turned upside down. Having belonged to the peasant caste in early 2021, Hollicisms watched the rise and reign of GameStop and deep fucking value from his vantage point on the sidelines, helplessly licking windows as the boys made their money. Watching it all unfold, Hollicisms was determined to throw some skin in the game at the next twice-in-a-lifetime opportunity. It appears that in April 2021, Hollicisms acquired a keen interest in 2 particular meme stocks, GameStop, of course, and AMC. On Reddit forums TrueStock and WSB Elite, Hollicisms extensively read the due diligence of esteemed apes who believed the stocks were destined to rise and reclaim their January short squeeze highs. The rising scholar of Reddit stock tips subscribed to the theory that GameStop and AMC would continuously short squeeze and directly transfer money from the hedge fund's pockets into his pockets. Some of the DD he was reading predicted an AMC price of over $400,000. Never mind that would make AMC worth $168 trillion, which is 8 times higher than the US GDP. Was at least conceptually sound, and Hollicisms elected to tangle with AMC Entertainment, a movie theater stock with continuously decreasing revenue. His DD predicted AMC would make a decisive move higher between May 13th and June 2nd specifically, so there was no time to dally. On May 12th, Holly took all the money he and his entire family had to their name and gambled their life savings on what he saw as his redeeming chance to earn thick cheese. On May 12th, no time to dally. On May 12th, Holly took all the money he and his entire family had to their name and gambled their life savings on what rose. Holly could expect a $14,500
and 3CR0 plays is now live.
For each dollar it dropped,
streaming Fortnite. They ain't on my league / listening to stocks talk.
If AMC were below $9 on May 28th, his whole $33,600 and likely his relationship with his kids and any prospect of his wife staying faithful would disappear into the void. Holly packed his bags with liquid courage and a pinch of madness. He was all in. Initial results were relatively modest but still quite impressive. By Monday, May 17th, a week into his moon mission window, AMC rose from a little over $10 up to over $14. Gamma had increased his modest but still quite impressive. By Monday, May 17th, a week into his moon mission window, AMC rose from a little over $10 up to over $14. Gamma had increased his after 1 minute and 48 seconds precisely. He took his whole wad and blew it all on 610 call options, all expiring on June 18th, with This was it. One shot at making dreams come true, or he would never financially recover. Would this trade crash and burn like so many gamblers before? The apes had other ideas. AMC absolutely caught fire in the last week of May. Financial advisors were losing their shit as people cashed in their life insurance policies to buy shares of a dying movie theater chain. Kramer ripped ass on live television and didn't even try to play it off. The internet meme machine was operating at maximum force. Just 2 days into the climb, AMC was worth over $19, and Hollicism's calls were worth over $350 grand. From his starting point just 2 weeks prior, the champion 10x'd his portfolio, but it wasn't enough. With adrenaline kicking at 1,200 horsepower, the madman got lost in the wind and rolled up his calls once again, selling his whole position and then flexing the cash to immediately buy 2,077 calls at the $20 strike. The expiration, 2 days later. For the next 2 days, the wild boy would gain or lose about 100 grand for every $1 AMC went up and down. If AMC did not rise above $20, his entire investment would go up in smoke. But Holly didn't earn his money by being a little bitch. He was all in. And what a good move it was. Over the next 24 hours, AMC galloped higher with great avarice, doubling to over $27 by market close on May 27th. Prince Holly's position ballooned from $350,000 to over $1 higher with great avarice, doubling to over $27 by market close on May 27th. Prince Holly's position ballooned from $350,000 to over $1.5 million. 500 calls at the $27 strike, expiring the very next day. The lunatic counted to zero and threw his skin back onto the skillet. With an expiration date the next day, if AMC dropped below $27 by market close, about $1 million would get flushed down the crapper. But it would not be so. On expiration date of Friday the 28th, AMC blew up to over a day. The lunatic counted to zero, $36 calls expired. Some people might take that as a sign not to press their luck, but the wild one saw his life flash before his eyes, said screw that, and slithered his way into some more dinero. You see, Hollicisms is a Theta Gang warrior at heart. He hangs out in Theta's Discord and knows the gang's power moves top to bottom. Hollicisms is a Theta Gang warrior at heart. He hangs out in Theta's Discord and knows the gang's power moves top to bottom. He pulled a fast one on the other apes and was able to claw back $42,000 from covered calls by the late afternoon. Even if his whole trade failed from this point forward, he still made over $9,000 from his original starting value. With over 1.4 million left in shares going into the following Monday, Holly took a smoke break over the long Memorial Day weekend and geared up for the next trading day. When the market reopened on June 2nd, Holly sold almost 40,000 shares and used the money to buy out-of-the-money calls expiring 3 days later. With no regard for risk, the Prince of Degeneracy got back in full-footed. What happened next is for mature audiences only. By the grace of Wall Street and the patron saint of cinema, AMC made an absolutely mind-boggling jump that very day. From $30 to $60, the dying movie chain charged higher like a dragon out of hell, carrying Holly's portfolio to over $6.3 million of unmedicated, ab-ripping, cold hard tendies. For the sake grace of Wall Street and the patron saint of cinema, from 33,000 to 7.626 million. The great colonel of the army of apes achieved what millions of degenerate traders can only dream of. We can only assume that when he went to his financial advisor to get some consultation, the old man blew a gasket and required extensive repair before putting a plan together. Let us never forget
and
the
3CR0 Plays is now live.
That led to this otherworldly
Streaming
success.
Fortnite. They ain't on my league / listening to Stocks
every
Talk.
ounce of our strength. And if you'd be so willing to accept a crown from Theta Gang, even though you clearly went your own way, then please accept this token of acknowledgement and receive your coronation as Imperator of House Theta.
Who wants to be king?
I hope you guys all enjoyed the story. Keep in mind, results not typical. You're much more likely to wind up a Toofy than a Hollicisms. Thanks for watching, and I'll see you next time. No matter what sort of pandemonium is going on in the market, the mad lads over at Wall Street Bets never fail to present a clear and present danger to themselves and those around them. With this spring introducing such exciting events as 3 major banks getting curb stomped, a certain towel company finally declaring bankruptcy, and the first bona fide recession in 15 years, there is no shortage of mayhem on our favorite sub. Fellow degenerates, it is my honor to present the most sick nasty trades of Wall Street Bets. First up into the box is user Suddenly Abalone 4966. a longtime crypto and OnlyFans enthusiast who recently pivoted to equities and options. As a relative newcomer to the gambling den we call Wall Street Bets, Abalone was highly susceptible to peer pressure in early 2023, but after a short stint observing other people making money off janky DD, our man decided he was capable of doing his own equally dubious stock research. It was time to take his piece of the pie. In early February, Abalone observed that Pepsi stock trades highly cyclically. When Pepsi was trading for about $170, our man believed it would spike prior to earnings and then subsequently come back down, just as it had done each earnings season for several years. Admittedly, this is better DD than most people, and the big baloney went all in on calls at the $185 strike, expiring a responsible 30 days out. His gambit did pay off in this initial maneuver. His first evident trade on Wall Street Bets netted the shellfish a cool $4,700, a 27% gain to about $22,000. But this was just the tip of the iceberg. Abalone's account hit $25,000 at the end of February, but the big man was not nearly satisfied. To really get that portfolio juicing, he decided he needed something a little more volatile than Pepsi. Something like Tesla. With no further DD evident, Abalone plopped his entire account down on Tesla calls expiring on something like Tesla. With no further DD evident, Abalone plopped his entire account down on Tesla March out. He took a small position with at the money strikes and a much larger position, about 4% out of the money. His expectation was that Elon was due to print some big news for the EV squad, but the days ticked by. Elon Musk was inexplicably silent. Expiration approached, and ultimately the muskrat left the boys high and dry. By the time he cashed out his L, Abalone had taken well over 90% losses and was left with $3,000 of cash and some detritus from his nearly worthless calls. His Robinhood account was fried. Luckily for Abalone, his Weibo account had about $10,000 in it. If he were going to get his money back, Weibo would need to carry him to victory. According to the man himself, Abalone did extensive DD over several hours and determined that cybersecurity company Zscaler would rise substantially after its earnings report the following day. In fact, he was so confident that this moonshot was coming that he put his entire $10,000 balance on calls expiring after market close on earnings day. When CEO Jay Chaudhry took the mic to announce earnings, the company did throw out some impressive stats, but investors were unimpressed. By the time the call was over, the stock was already slipping hard. Abalone refused to release his grip and diamond-handed his calls into nothing. By the day's end, his Webull portfolio was insolvent. Between multiple accounts, he had blown himself up from a peak at $65,000 to just $3,000 left on Robinhood in the span of 2 weeks. Some Redditors recommended he seek help for his gambling addiction, but suddenly Abalone assures us he's got it under control. That's what they all say, my friend. See you Monday. Now, let's dive into Sick Nasty Trade number 4. Next up into the pocket is Math Guy 100, a guy who spends way too much time on Reddit, but has close to zero investing skills. In other words, a pretty typical guy. During the 2021 GameStop squeeze that put Wall Street Bets on the international radar, many scrubs off the street waltzed into the new year thinking they were master investors. Short squeeze became another phrase for stock rising. Every green candle was regarded as a short squeeze, and 100 pump and dump stocks sprouted communities of bag holders thinking that their stock was the next GME. Math Guy 100, despite his calculus background, is among them. As a card-carrying nerd, he was familiar with the computer equipment website Newegg for many years. When the online retailer hit a brief high of $79 on a weird bubble moonshot in 2021, an armada of apes piled in, only to be dragged down back to the single digits over subsequent months. Most chimps moved on to the next pump and dump, but Math Guy stayed behind, convinced that the massive decline was just an attack by short sellers seeking to shake out the troops. For the next year, the math nerd posted or commented almost daily on how the short squeeze was imminent. But by January of 2023, even he was exhausted. Our homie exited with an unspecified loss and moved it over to the greener pastures of Wall Street Bets options trading. He initially dove into another former pump and dump called Mullen Automotive, but was quickly sussed out for a small loss. To get back in the game, our man took his $3,000 portfolio and entrusted it to Elon Musk and the Rat Boys. In late January, Math Nerd went all in on Tesla calls at the $250 strike expiring in a month. At the time, Tesla was trading just below $144, putting his options over 60% out of the money. But within a couple weeks, Tesla self-yeeted to almost $200, putting his calls up over 250%. Our man's portfolio now sat at over 10K. But the young king was not complete. He patiently reassessed and elected in mid-March to go all the way back in on 84 calls at the same $250 strike expiring in late April. But when the Wall Street Bets peons told him that the position was ass, he flipped some unspecified SPY options to make about $4,000 more, and then put the whole pot right back on the same Tesla position he had before. He was subject to ridicule, but the criticism only fueled the big shot's ego when Tesla rallied hard to $207 at the end of May. The nerd gone wild made over 21 grand in one day. Only fueled the big shot's ego when Tesla rallied hard to 200. Nerd gone wild made over 20, and his portfolio ended there. But alas, we know how this goes. When the market decided that 93% year-to-date gains was adequate, the stock floundered and IV got crushed. The nerd's huge gain transcribed to a $13,000 loss 3 days later. Initially, he stayed resolute, believing that this was only a temporary dip. But within 24 hours by April 4th, he took his L and decided to announce to his fans that he would flip over to SPY calls. He went all in with his remaining $15,000 balance on 157 out-of-the-money calls expiring at the end of the week. A bold and reckless move. By the following morning, he paid the price. SPY dipped and he was down another $11,000, leaving him with a meager $2,500 to his name. In his words, Icarus flew too close to the sun. These days, Math Guy is back on the Newegg Squeeze subreddits, praying for a short squeeze that will bring him back to his glory days. A short squeeze that will never come. Keep working on those math skills, buddy. Now, let's check out Sick Nasty Trade number 3. Our next wild boy is a private character with a throwaway account by the name of John Lee 2023. As a throwaway, we regrettably cannot penetrate deeply into this guy's personal history. However, John Lee did share that he recently exited a startup company in 2022 with a payout that appears somewhere close to $1 million. A satisfactory sum that inspires people to reasonably invest in blended income and growth instruments. Unless you're a degenerate Wall Street Bets gambler with Reddit karma to earn. John Lee consulted himself in the mirror while drunk and determined that he should risk approximately half of his net worth on high-caliber, low-octane stock options and seek obscene gains. And as everyone knows, when trading aggressively, only a coward keeps his trades small. John Lee dumped 416 grand into a Robinhood account and rapidly zipped in and out of calls and puts. For those who want a rush without drug use, this is an effective strategy, but for guys like John Lee with precisely zero precision, this is a great way to precipitously lose net worth. In what appears to be only a few months, the tech bro shot in and out of positions, losing money almost every single time. A straight cascade looking like Angel Falls from over $400K to about $600 in one disturbing motion. Typically, when someone loses money like this, we at least see a few wins along the way, but there are exactly 0 redeeming trades in this waterfall. John Lee traded so often that he turned over his account about 28 times in this short span, trading over $11 million in proceeds. And he's got a cool $1.3 million in wash sales that will pay it forward. Dunk on him all you want to, but you don't have 450 years of tax deductions to look forward to. Congratulations on trading like complete ass, John Lee. Now, let's move on to Sick Nasty Trade number 2. Next up in the hot seat is user DBO199523. A certifiable gambling addict with very little concept of risk management, so another typical Wall Street Bets user. He appears to have joined our beloved subreddit in the spring of 2020 after making some big gains on Home Depot calls. Debo subsequently managed to lose $32,000 in a single day 2 weeks later. Then, things got worse in 20. After making some big gains on Home Depot calls, Debo subsequently managed to lose $32,000 in a single day 2 weeks later. Then, things got Boeing and J-Powell. May and June, the big man suffered a $65,000 swing that left him in an $18,000 margin call with Robinhood. But that taste of initial success with Home Depot, ignited an insatiable craving in our degenerate friend. He was hooked. In a pro-gamer move, Debo deleted the Robinhood app and moved things over to Interactive Brokers for a fresh start. Over the next 3 years, he indeed got plenty of fresh
and
starts.
3CR0 plays is
zero
now
date to
live.
expiration gang trader
Streaming
for life.
Fortnite.
Our man's
They
swings
ain't on my
are
league
wild.
slash listening
10xing
to
a
Stocks Talk.
$3,000 trade in a few hours was a relatively common phenomenon for Debo. To his credit, he does appear to have cashed out incremental gains, but invariably his luck ran out, sending the better part of his portfolio back to earth once again. Until his week of reckoning came in early March 2023. On Thursday, March 9th, Debo was deep into a week of consistently losing money on puts. For 4 straight days, our man habitually bet that SPY would tank and lost money each time. But unsussed, the gambler sustained his belief that the market could not sustain prices above SPY 400 and took his last $7,000 to bet on a market dump one more time. For his sustained volition, Debo was rewarded. SPY completely tanked later in the afternoon, turning his 7K into 90,000 in 4 hours. For his sustained volition, Debo was rewarded. SPY completely tanked later in the afternoon, turning his 7K into 90,000 in 4 hours. The hotshot cash K. No one, but he wasn't even close to done. Dipped substantially and was due to reverse course. With a modest $12,000, Debo went back in on SPY calls at the 385 and 390 strikes, expiring that day. He took a shower, ate breakfast, and then checked his phone an hour later to observe that SPY had yeeted itself back to 389. Debo took a $50,000 gain in a single hour. But the show was still not over. That Wednesday, the man with the hot hand has observed SPY once again. He believed that the market was due to recover further and dipped his toes into 200 call contracts at the 390 strike. Of course, those contracts expired the same day. But throughout the day, SPY showed no intention of mooning. The market languished and Theta slowly nibbled away at Debo's calls. He was forced to double down, then triple down, then quadruple down as Theta Decay ate him from the inside out. By 1 p.m., Debo had 1,000 out-of-the-money SPY calls, all getting dusted. In a final leap of faith with reckless abandon, the mad lad dumped his entire portfolio, all $120,000 worth, into yet more out-of-the-money SPY calls at the 387 strike. If the trade failed, the Phenom would be back to nothing, forced to toil in the earth as he bore the stain of gambling addiction. But the Wall Street Bets deities had other plans. In a miraculous turnaround, SPY decided at 2:30 p.m. that it was time to rocket. The market shot up to SPY 389. In an unbelievable twist, Debo the Great's portfolio self-yeeted another 165K, and his account sat at a massive 280,000. A massive W for a man with massive balls. Congratulations on the huge gains, Debo. And everyone, remember, results not typical. Now, the moment we waited for, our most sick nasty trader. On March 19th, author Mark Manson released a hard-hitting YouTube video that professed convincing DD on how to be more successful than 99% of other people. 1. You must have a contrarian idea. 2. You must be correct in your contrarian idea. And 3. You must execute hard on your contrarian idea. His DD is exceptional, but he forgot point number 4. Don't be a fucking idiot immediately after succeeding in points 1 through 3. That should go without saying, but evidently it does not. I introduced Josh Bone 12, a highly regarded PhD in quantitative finance. As a trader who appears to get all of his financial advice from Reddit, Josh is the epitome of Wall Street bets. To give you a sample of his trading career, our man inherited approximately $300,000 from an unspecified dead relative in June 2022. He initially intended to purchase a wide range of tech stocks, but ultimately settled on leveraged ETF TQQQ, believing it to be lower risk. He elected to also drop a portion into Bed Bath & Beyond, losing about 50K by August 31st. And just to make sure everyone knows how much of a brat this guy is, I'm gonna leave this screenshot of his grievance on screen for a little while. This looks like a shitpost, but he's 100% serious. He blames Wall Street Bets traders for convincing him to buy Bed Bath & Beyond stock in anticipation of a short squeeze. He says that other traders posted DD that deceived him into buying, and blames bystanders for not stopping this deception. He compares the situation to the Holocaust, in which bystanders failed to prevent atrocities. He also bought deep out-of-the-money puts on Carvana earnings and lost money to IV Crush even though the stock price dropped. He did not understand Theta, and so believed that Webull had committed fraud when the price of his puts dropped and so complained to the SEC. Again, this looks like a shitpost, but this guy is just a true spoiled regard. Nonetheless, Josh stuck around and traded on a slow downward decline until mid-April, when he assessed that regional bank failure contagion was no longer a risk. He began with a modest bet that JP Morgan would lead the banking recovery. Although his reasoning was pretty off the mark, JPM still popped off and netted our homie $20,000 in gains. Still, Joshua revised his outlook at some point shortly thereafter and was indeed convinced that regional banks would continue collapsing. On April 26th, he put his money where his mouth is and dropped almost $100 grand on at-the-money puts on First Republic Bank expiring in 2 days. Analysts from Bloomberg to Reddit were all convinced that FRC was about to get demolished, and Josh needed FRC to get obliterated in the next 3 days, or his portfolio would get Thanos'd. Within an hour of opening his position, FRC had shot up over 10%, and Josh's puts were down about 53 grand for a loss of 50%. But fearlessly, the PhD tripled down, replenishing cent, and Josh's puts were down about 53 grand for a loss of 50%. But fearlessly, the PhD tripled down, replenishing his bare ammo with another 520 at-the-money puts. He was now armed with 1,370 puts, ready to drive nails into FRC's coffin. But the maneuver was costly. The zombie bank continued to rise throughout the afternoon, and Josh was approaching another 60K loss. He paper-handed the weekly positions exactly 30 minutes before FRC precipitously tanked, and he watched, barefoot and hopeless, as the stock dropped without him. Josh's FOMO began to manifest, but the big man had some paper left on the sidelines, his life savings, and he dumped it all into another 320 at-the-money and out-of-the-money puts expiring on May 5th, unable to cope with the thought of missing out. And when FRC continued its bear fiesta into the following day, the wild child was vindicated. Most of his losses were negated when his puts shot up in value, giving him an over $75,000 gain. Wall Street Bets users, including Kanye West, advised him to cash out bigly. If the ticker were halted, he'd be bag holding a huge gain, unable to realize it. But Josh refused to heed the warnings, and instead planned to hold until the stock was deemed worthless, at which point he'd execute his puts and force his counterparty to buy valueless shares. And then things just get funny. Josh was so engrossed with gains that he refused to cash out until he won the whole pot. However, when FRC got delisted, Robinhood would not let him execute since there was no stock to sell. To say that Josh got litigious would be an understatement. In early May, Josh posted enraged. He declared Robinhood a den of jackals and threatened to sue for almost 300 grand if he was unable to execute his puts. He posted evidence of what he believed was infallible proof that Robinhood support promised him he would be able to execute. But in this 1:30 a.m. conversation, the customer rep just says that he'd be in a tough spot to exit the position and makes no promises. Josh was deluded, and in his follow-up conversation in which the rep said, "I don't know what will happen to your puts," Josh took it as further evidence that Robinhood promised him something that they did not. He consulted a lawyer who appeared content to get paid in exchange for taking the case. He also entered the bargaining stage of grief and asked that the wider base of Robinhood users advocate on his behalf. His effort was for naught. We can tell the grief began to overcome his optimism, because for probably the first time in his life, Josh stopped acting like an entitled baby and apologized and begged for help. After some unhinged ranting, Josh bargained that he would make a $10,000 donation to the Autism Society of America if Robinhood allowed him to seize his gain. The masses on Wall Street Bets relished in his suffering. It was satisfying to watch this obnoxious imp squirm. With any luck, he learned the value of personal responsibility, instead of comparing Reddit users to Holocaust bystanders. But the day after, it appeared JB was back to his old antics, declaring that he'd, quote, won after being told that he may be able to cash out. Again, not understanding the words may versus will. But fortunately for him, Robinhood did reinstate trading on FRCB, the company's new ticker, allowing Josh the liquidity to close. He did not exercise his puts, but rather sold them for a $156,000 gain. After factoring in the prior losses on his other FRC puts, the gain is still around 100K. This is a win. This is the W he was waiting for. His stated intent was to close his position and reinvest the $100,000 into blue chips and dividend stocks. If only the story ended there. with the whiny prick getting a serious gut check and walking away from this debacle a reformed man. But alas, this is Wall Street Bets. Josh's pride and delusions of being a gift to the world pushed him to cite a technicality that he only promised to donate $10K to autism if he exercised his puts. Since he sold the puts instead of exercising, he declared the arrangement void, thereby acting like a complete scumbag lawyer. This is ironic because in the previous sentence, he declared his actual lawyer a scumbag for telling him that he needs to collect more information before suing Robinhood. But karma has a way of biting back. While he pledged to stop buying options, he elected to perform equally degenerate trades with other strategies. With his $100K gain and around $90,000 left over from his original position, Josh decided to place an after-hours market order on shares of PacWest Bancorp, which is also nearly bankrupt. Placing an after-hours market order is a sure way to get a bad fill, and Josh nearly blew a gasket when he realized he got filled at 17.7% above the bid for an immediate $41,000 loss. Again, he blamed Robinhood. Disturbed but not broken, Josh performed DD on First Horizon, another struggling bank. The CEO of TD had expressed intent to buy out First Horizon, and therefore Josh concluded that this arrangement was a done deal. First Horizon, ticker FHN, was a buy. He went in with $100K, which is the remainder of his gains from the FRC trade, plus $40K from his original coffers, and bought over 7,000 shares at about $15.70 each. 8 hours later, TD pulled out of the deal, and First Horizon was back on its own. Shares tanked almost 50% immediately, and Josh closed out another $53,000 loss. On Cinco de Mayo, as Americans celebrated Mexican independence on the wrong day by visiting Taco Bell and Chipotle, Josh posted an unusual moment of clarity. He admitted that he was struggling from gambling addiction and was determined to win back his losses, which is kind of a symptom of gambling addiction. To do so, he decided to stop gambling with risky shares of banks on the verge of bankruptcy and instead sell put options on banks that are on the verge of bankruptcy. His weapon of choice? Western Alliance Bancorp. With the stock trading at $20, he determined that selling puts at the $12 strike for heavy premium was a worthwhile risk. If the options expired worthless, he'd recover back to his post-FRC value. In a trade that must have required an additional deposit, the addict sold 279 puts on Western Alliance at the $12 and $13 strikes for $100K in premium collected. Finally, the nightmare was over, he said. He would be indemnified and didn't even owe the Autist Society $10K, according to him anyway. The degenerates manhandled him for his dishonesty. We love reckless trading. The tragic hero arc is one that we treasure time and time again. Sometimes it's admirable to trade with impunity, almost defiantly. But that's not what this is. Josh was sliced apart with insults that bore deep, permabans. The man reaped what he sowed. But as for his final YOLO, did he succeed? Well, according to the man himself, he was banned and shamed, and lost more money still until he stood homeless and barefoot, a disgraced gambling addict. Technically, this is possible. WAL did briefly tank on May 4th, so if he opened the position just prior and then closed at the bottom, he would have been cucked. But Josh's clarity post was from May 5th. Surely if he traded that poorly, he would have mentioned it. I think Josh's redemption trade on Western Alliance did go according to plan, and if he's still holding, he's up about 84K. But Josh has since gone silent, only commenting on popular yet irrelevant subs like idiots in cars like a normie. Josh, if you did indeed recover your losses, I call upon you to fulfill your pledge. Donate $10,000 to the Autism Society, lest you remain cursed, permabanned, and a worthless creature unworthy of eating ramen noodles off the bottom of my boots. Regardless of how your story ends, one thing is for certain: you will never be forgotten. Although I am not enthusiastic about doing so, I offer you the crown of degeneracy.
Who wants to be king?
I hope to catch you guys on our free Discord, and check out the other series on my channel, like the 3K Challenge and the Freeloader Challenge, where you actually make money. And don't forget to subscribe so you don't miss the next Dank Trades video. Thanks for watching. Hello, Theta Gang. It's Mikey Millions here, and I am very excited to welcome you to our next iteration of the Dankest Trades series. This past autumn on November 3rd, the people of the United States went to the polls to vote for Donald Trump, or mailed in their ballot to vote for Joe Biden, thus bringing a most fiercely fought election to its climactic finish. That night, it appeared as though Cheeto and the red team would carry the day, and the Big Mango got up on stage to declare victory within hours of the polls closing. But the Cheese Doodle blew his shot too soon, and over the next several days, poll workers picked through their backlog of ballots. Things tightened up quickly, and all eyes turned to Nevada, where its 7 electoral votes could swing the election in favor of Sleepy Joe Biden. But Nevada is 50th in education, and counting things under pressure was not her forte. Georgia and Pennsylvania actually beat her to the punch, and as Philadelphia and Atlanta tallied their votes, Uncle Joe and the Donkey team emerged as the clear winners. Although Rudy Giuliani and Sidney Powell did their best to unleash the Kraken, judges were largely unconvinced that Hugo Chavez rigged the election. Even the Supreme Court and its 3 Trump appointees failed to put any stake in Texas's last grievance of desperation. In the final hours, a last-minute Confederate assault on the Capitol delayed but did not change the ultimate outcome, and Congress reconvened quickly to formally declare a Bidenist communist victory. All the while, investors and degenerate gamblers of all shapes and sizes tailed the election and its follow-on legal drama with a magnifying glass. As a blue team victory became more and more likely, money flowed into Democrat-favored industries like electric cars, renewable energy, and dank kush, bringing sick gains for those with skin in the game. And as the broader market yeeted itself to the fucking moon of Dow 30,000 on news that we would probably not have a civil war, bulls danced in the streets and bears went back into hibernation. Boys and girl, it is my pleasure to bring you the most partisan trades of the election. We're gonna Cupid shuffle this episode right into the Kai Apple Pie frat house and meet our first partisan trader. Too rarely in this series do we recognize the challenges the impoverished American college paupers face, but every once in a while, it's nice to explore the plight of the indebted university students and the creative measures they employ to improve their financial prospects. If the point of college is to learn, there's more than one way to suck down a lesson, and our first trader truly paid his Wall Street Bets tuition money to learn the ropes. Ryan Long 770, aka Student Debt Bets, is a student in Georgia who managed to earn an associate's in business by the ripe old age at a community college. After several weeks of huffing Sean Hannity freebase and sheepdog propaganda, the aspiring adolescent was convinced the presidential election would drive America to civil war. With his extremely bearish outlook, he probably should have bought a rifle, but instead, Ryan took all the money he had in the world, $2,935, and slammed it down on unspecified triple-leveraged S&P 500 and NASDAQ ETF puts, most likely SPXL and TQQQ, expiring 3 days after the election with the expectation that the Boogaloo Boys and Antifa would immediately engage in mortal combat and fracture the entire country. If Newsmax and OAN were to be believed, this trade
and 3CR0 plays is now live.
But Ryan's big dreams
streaming
of Bloodbath and
Fortnite.
Armageddon
They
failed
ain't
to
on my
materialize.
league / listening
The
to
election
Stocks
offered
Talk.
no impetus for militias to face off in the streets, and the most polarizing groups in the country simply talked trash outside one time and then went back to exchanging spicy memes on the internet. It was much lazier than anyone could have imagined, and the broader market rallied in response. Of course, holding puts on a triple-leveraged bullish ETF in a bull market is one of the top 3 things you don't want to do, and as a result, Ryan's account dropped to a perfect $0 in value. In his very first YOLO ever in life, Ryan Long 770 treated us to the fabled lose literally all of your money trade, which from a technical standpoint is actually kind of hard to do. It looks like the young man was a little too hype. With an election on Tuesday, did he really expect a communist revolution by Thursday? It took several months before anybody even raided the Capitol, and on that day, stocks went up. But at the rate things are going, stocks would have gone up during a civil war anyway. Welcome to the party, Ryan. Stonks only go up. Good luck with that business resume. Now, let's check out partisan trade number 4. As Blue Team's victory began to take shape in the days immediately following the election, all eyes were on former cop Kamala Harris. After years of prosecuting people for Mary Jane possession during her days as a DA, it appears that at some point she learned the scariest thing about ganja is getting caught with it, and and she made a 180 on her approach to the devil's lettuce during the second half of her political career. During her debate with Race Bannon and The Fly, Kamala promised to legalize La Mota and expunge the records of those who she once prosecuted. When Donkey Team's victory appeared imminent, there was one thing on everyone's mind: getting high as a kite on perfect 69 calls at the $6 strike for $5 each, expiring with a grand total of $345 in play. MVP Bob had his lotto tickets on the table. Despite being a Canadian company with minimal exposure to the US market, the sheer exuberance over the prospect of legalized reefer sent investors deep into Aurora Cannabis overnight. On Friday the 6th, ACV rallied a full 56%, marking a massive 92% increase from Bobby's buy price the previous day. The huge increase in share price translated into an absolute monster gain for Bob's $6 calls. While he bought each contract for just $5, by Friday afternoon, his calls were worth $546 each. That's a 109 bagger, a legendary gain of about 11,000%. By the time he cashed out, he had turned $345 into $37,674 in less than 12 hours of trading. That's enough for about 15 kilograms of mediocre weed in the Los Angeles market, enough to keep an adult male high for 6.849 years if smoked 1 gram at a time for 24 hours a day. That alone is an excellent return on investment. Don't forget to smoke up your buddies there, Bobbert. We're moving right on to partisan trade number 3. For our next partisan trade, we're going north of the border to meet our friend Pike Eater 47, who, despite being a full-blooded Canadian with maple syrup in his veins, knew that trading high-flying US equities across the border is the real secret to trading with intensity. A lower middle-class security guard making $19 an hour and probably getting taxed at like 40%, Pike Eater 47's financial situation was difficult to improve. To make matters worse, he suffered the burden of a frigid live-in girlfriend who took on $40,000 of student debt without finishing her degree, but expected Pike Eater to pay it off. As she sat around unemployed and spending his money, our man worked with great determination to secretly set aside $5,000 in case he ever needed to escape his dire predicament. In late October, that day of reckoning came, and Pike Eater 47 shared his disturbing story. He came home one night after a long day of stopping teenagers from shoplifting Toblerone and bagged milk to find a strange man leaving his home. When he asked his girlfriend about it, he was apparently just a friend and no one to worry about. Pike Eater let it go. But after catching this guy sneaking out of his house 2 more times that month, the rightfully disturbed boyfriend confronted this stranger. Upon being pressed, the man admitted that
and
he was
3CR0 plays is now live.
Male escort, getting
streaming
paid to smash this
Fortnite.
dude's
They
girlfriend
ain't
while
on
he
my
was
league
working
/
hard,
listening to
earning the money
Stocks
that she
Talk.
paid him. He was literally paying someone to plow his GF. Absolutely enraged, Pike Eater 47 did what had to be done. On October 30th, he took his $5,000 emergency fund and threw it down on out-of-the-money Palantir calls, with the contract expiring on November 27th. At the time, Palantir was trading for a mere $10, but we all know where the stock went over the next 30 days. Palantir achieved ultimate meme stock energy and furiously burned its way to over $30. On expiration day of Friday the 27th, Pike Eater 4 sold the calls just hours before Citron trashed it, cashing out a 1,022% gain of about $55,600, which he promptly used to buy almost 1,800 shares. With a 10-bagger under his belt, Pike Eater 47 determined that he would have enough money to leave his girlfriend if his Palantir shares hit $40. But how this is even a valid goal before you leave your cheating girlfriend, I have no idea. Canada is apparently a funky place where you have to pay alimony to your girlfriend if you break up with her after living together. But by Pike Eater's own account, that should only be between $500 and $1,000 over the course of a year, so it's no barrier. Nevertheless, Wall Street Bets had his back, with many of his fellow degenerates pledging to buy shares and send Palantir to the moon. And by all accounts, he needs to ditch this toxic relationship regardless of what some American discount NSA company's stock does. As soon as he learns what a covered call is, Pike Eater is going to ditch this debt-ridden girlfriend and live the high life with VIP tables at the nightclub. From a cuck Canuck to, hopefully soon, an absolute Chad, Pike Eater 47 is about to be back in the game. please learn what a covered call is by either. We're going to check out partisan trade number 2. We're going to ramp it up here with a story that's bound to piss off every traditional investor who actually does research before placing an order. Our number 2 most partisan trader is an impatient fellow from Los Angeles who quit the USPS right after orientation because the process was too slow, and now works at a fast-paced restaurant for $10 an hour. Known as F Bagholder, he is, judging by the name, no stranger to placing aggressive trades. In accordance with his lifelong trend of operating with the speed of Sonic on meth, the big guy dove into the market with both feet on November 10th with dreams of millions. Armed with a mere $3,000 and Robinhood Gold, there was no time to waste. That afternoon, Homeboy dropped his entire stack into slightly out of the money calls on DIA, also known as the Diamonds, the ETF that tracks the Dow. But the following morning, he realized he was not a millionaire, and he paper hands those Diamonds calls within minutes of the market opening for a loss of $500. But unperturbed by a loss of 1/6 of his account, F Bagholder merely switched jackets to ditch those boring ETFs. Within minutes, he threw his remaining $2,500 into out-of-the-money Neo calls at the $44 strike. Fast forward a couple of hours, and his cash pile tripled into over $7,500. Right away, our man started sniffing the WSB solvent, and there was no turning back. Over the next 2 weeks, Sonic the Meth Hog bought calls on meme stock after meme stock, going all in each time and never holding a single position for more than 2 days. His trades are an absolute whirlwind. He first doubled his account again with Palantir to 15,000, flipped Fisker 8 times to make 2,500 more, then somehow managed to lose $4,000 on Plug, nearly doubled again with Neo to $23,000, halved it with Fisker to 13,000, doubled back up with Palantir to 29,000, and nearly doubled again with Tesla to 54,000. Then burned half of it on GameStop back to 28,000 and bought it up to 30,000 again with Neo. By my calculation, he traded every meme stock in the book a grand total of 55 times between 11th of November and 24th of November with no sign of slowing down. Unsatisfied with his $30,000 portfolio and with his adrenaline pumping at maximum force, the speed demon counted to 1 and went right back in. On Tuesday the 24th, Square was trading for about $204. Anticipating that rampant demand for material goods and services going into Black Friday would drive shares higher, our man bought 229 calls at the $205 strike, expiring on Black Friday itself for a grand total of 30 Gs. Overnight into Wednesday, Square shot up 5% to $212, and those calls had more than doubled in value to about 73,000. Homeboy quickly closed the trade and then immediately trusted the entire stack to Papa Elon at about 2 p.m. when the stock had begun to drop into the red. Buying 73 grand worth of out-of-the-money Tesla calls, the madman was banking big time on an end-of-the-day turnaround. But the muskrat never fails, and Tesla stock rallied back into market close, carrying F Bagholder's portfolio with it. Once his account hit that treasured 6-figure mark about 90 minutes later, the F had closed the trade and walked out with a $102,700 portfolio. In 10 trading days, the big shot had placed 96 orders, 67 of which were filled, netting him a grand total of $99,791, or over 3,300% in gains. How or if he slept at night, I have no idea. When asked how he achieved such rapid success, our man's response was precisely what you'd expect. I've never read any books. I'm not even well versed in options. I only understand the very basics. I put no complex thought into this and just traded on instinct. It was pure luck, and if one of these stocks dropped 5%, I'd be wiped out. He is, by all accounts, a Wall Street Bets paragon. And what do we do with Wall Street Bets paragons? We press F at their caskets. Next we heard from F Bagholder. He spoke to us his Robinhood account's last will and testament. After burning his way to an intraday high of almost $250,000 on some unspecified play, most likely Tesla calls, Icarus's wings began to melt off. In the second half of December, F Bagholder chased his dream of reaching the fabled 7-figure mark by dropping a massive 6-figure stack into Palantir calls at the $30 strike, expiring New Year's Eve. And although he had success with Palantir prior, just as Palantir can giveth, Palantir can taketh away. The The stock fizzled out into year's end, dragging Eth's account down by about 200 grand before he sold the trash positions off to the next clown. Just like that, one trade, the vast majority of our prodigy's gains got curb stomped. But still packing a $33,000 account, our man's illusions of grandeur remained intact for one last bum rush toward the crown. In a desperate attempt to stay relevant into 2021, Eth trusted his last stack once again to King Elon on Monday, December 28th, tossing it all into Tesla calls at the $700 strike, again expiring on New Year's Eve. Expecting the Lord of Tendies to bring it all back, Eth was feeling confident, but that confidence snapped within moments of the market open the following day. Tesla took the day off to recharge its batteries, and the downward price movement at open Thanos those $700 calls into an 80% loss. Another $26,000 dusted to ash. Our man was left with nothing more than a shadow of his once beautiful account, now liquefied to a mere $7,000. And what's the point of that? Might as well lose the rest on some trash calls while you watch Tesla go back up to 718 right after you sold. And do you know the best part? This isn't the first time he made a hefty six-figure gain only to lose it all. Oh no, he made six figures off the shitcoin boom in 2017 to 18 only to watch it all get bit connected. Eth was an experienced veteran at this game. Our hero last spoke to us from the grave, urging those who made gains not to follow him down to the boneyard. Let his sacrifice not be in vain. Next time you make $250,000 in a month, take a 30-day break before gambling again. Keep your head up, my man. Third time's the charm. And now, the moment we've waited for. The most partisan trade of the election. One of our favorite movies at Wall Street Bets is The Wolf of Wall Street, a classic film that inspired 18-year-olds around the country to pursue wealth and cocaine at the cost of literally everything else in life. But among all the phenomenal and highly memeable scenes in that movie, there is one that stands out as providing excellent advice to the novice trader. Recall the scene where Matthew McConaughey and Leonardo DiCaprio shared their frequency of FAP. According to the boss, 3 or 4 times a week are rookie numbers. You gotta pump those numbers up. Only by doing so can you achieve the constant state of post-nut clarity necessary to be a successful trader. Our most partisan trader is a man who took that advice way too seriously. I give you Sir Jackalot, whose numbers must mean that he has the clearest mind the market has ever seen. So clear, in fact, that he rejected options altogether and instead favored trading an uncommonly used financial instrument called shares. Shares are like options that never expire and don't suffer from IV crush or theta decay, making them very powerful investment tools. Jackalot began trading at the market's heights in early 2020 with a moderate sum of $40,000 to his 401k. As the stock market turned sour in February and COVID took root, Homie stayed cool and bought shares in some largely unknown mask-making company called APT and a testing company called Co-Diagnostics to more than double his account. Then he switched to cash and held until the March 23rd bottom. Post-nut clarity at work. With the world's intricacies unfolding easily for Fapalot, he recognized quickly that Slack would readily increase in value as companies turned to telework, and Norwegian Cruise Lines would sail higher as pent-up demand for cruises meant the company was well positioned to take advantage of the coming economic recovery. He likewise identified that mixed signals on the pandemic meant the healthcare industry and travel industry would move inversely. As news stations hyped up the pandemic, healthcare would rise and cruise lines would fall. As politicians hyped up the recovery, the healthcare industry would drop while cruise lines glide higher. As though he could see the future, our man bought the dips and sold the rallies on both sides, flipping shares in healthcare and leisure stocks several times to quickly bring his account to $905,000 by early June. But even after that win, Jack remembered McConaughey's sage wisdom. You gotta pump those numbers up. After a 5-month trading pause to play Among Us and Animal Crossing, Jackalot reappeared on Monday, November 16th, halfway through No Nut November, and riding the post-election rally, all in as usual. With his whole account, our man dropped 900 Gs on Corsair gaming shares, banking on the stock's big PP energy and an oddly enthusiastic customer base to send those shares higher. At the time of purchase, Corsair was going for about $25.50 and rapidly picking up momentum. On no discernible news, Corsair gained steam early that week, and by Wednesday, the stock was trading at over $35.50 a share. Jackalot woke up to his $1,069,000 account, making it look easy. Being a millionaire is fun, but McConaughey's words echoed. You gotta pump those numbers up. Right after selling his Corsair shares, the big shot went right back in, dumping his whole $1,088,000 account into shares of Peloton at a price of $104.60 on Wednesday the 18th. His DD? New York City schools were shutting down again, so quarantine stocks would heat up fast. Like clockwork, Peloton rode up just $5 that week, but that translated into $50,000 for our high roller. Gotta pump those numbers up. In cash once again, our man looked around for his next big play, and GameStop certainly caught his eye. After the PS5 was released on November 12th, customers started buying them up like preppers on MREs. Around this time, Wall Street Bets was abuzz with the mother of all short squeezes and the opportunity this stock held, and a 90-minute Uber Kicks podcast sealed the deal. Armed now with over $1,100,000, Jack-a-Lot fully ate the hype, took his whole balance, and yeeted it into over 88,000 shares of GameStop at about $13 on November 23rd. As a backed-up Momo trader 3 weeks into No Nut November, there was no better way to distract himself than by throwing over $1 million at a meme stock. The bet was ballsy, but as though the world spun at his fingertips, GameStop shares notched win after win all week long, dragging a tail of parabolic Hulk dildos behind it, up to a high of $20. On the morning of November 30th, Jack gawked at his $1.75 million account, but it wasn't enough. Gotta pump those numbers up. Breaking from his traditional modus operandi, Homie clinched every share with an iron grip, and with earnings looming after market hours on Tuesday the 8th, Jack was convinced that an upbeat earnings report would really kick the short squeeze to maximum speed settings. That afternoon, CEO Sherman, who gets paid way too much money to run GameStop into the ground, took the mic and announced that the company sold 30% less stuff than the year prior. Traders who were promised a short squeeze were pissed, and they dumped shares left, right, and center. GameStop's price just melted off, and by the end of the week, it settled at about $13.30. Jack's record of immeasurable success was shattered. Unfortunately for him, the end of No Nut November coincided with a piss-poor earnings report from GameStop, and Jack-a-Lot took a hit back down to $1.25 million. A full $500,000 was gone. But Jack's willpower was maximum. He held his shares with iron chains and rode the stock back up to 15.5, where he closed out for a gain of about $216,000 on December 18th. Chugging a super potion to get his HP back in tip-top shape, Jack did some dank DD and found a SPAC prepared for liftoff. Northern Star Acquisition Corp., ticker STIC, is a SPAC. As such, it does precisely jack shit except raise money so that it can buy another business. That might sound like a con to pull money from dumb investors, but as far as we can tell, it's a 21st century non-hostile takeover of a willing business. And what business does Stick intend to purchase? Bark, a company that sells subscription gift boxes for dogs. As unemployment benefits dry up and our stimulus checks fluttered in valued less than a share of Tesla, other people of means are buying luxury gift boxes for their pets to the expected tune of $369 million in annual revenue. What better company, Jack reasoned, than to buy Stick, which will acquire Bark, a company that uses Instagram social media influencers to get people to buy Lickies and Chewies for their quarantine dogs. He went all in on December 23rd, picking up shares at about $14.25 each. Stick hadn't done much prior to Jack-a-Lot's endorsement, but fortunately for him, CEO Matt Meeker did a spiel on MSNBC that afternoon, and Stick began to rise. Shortly after Jack posted his DD to Wall Street Bets, the stock flew up 20% pretty much immediately the next morning. Jackie Boy cashed out his $1.669 million account and posted once more to Wall Street Bets to let others relish in his victory. People piled on to accuse Jack of pumping and dumping. And while we certainly know he does plenty of pumping, we don't know much about his dumping. Jack appears to be sitting pretty, almost certainly enjoying some personal time with his meat while the masses hurl criticism. And just to be a real jerk, as I was making this video, Sir Jack-a-Lot posted his $2 million account after he had a smidge of extra gain with Corsair. Will this amazing journey of wealth be enough? We already know the answer. No way. You gotta pump those numbers up. No matter how this thing goes, we congratulate the millionaire for making it this far. And whether he hits 8 figures or loses it all, Sir Jackalot is truly a Wall Street Bets hero.
Who wants to be king?
Hey, if you guys enjoyed this video, there's a lot more where this came from. Check out our Dank Trades playlist and catch them all. See you guys next time.
And 3CR0 Plays is now live. Streaming Fortnite, they ain't on my league / listening to Stocks Talk. And 3CR0 Plays is now live. Streaming Fortnite, they ain't on my league / listening to Stocks Talk. And 3CR0 Plays is now live. Streaming Fortnite, they ain't on my league / listening to Stocks Talk. And 3CR0 Plays is now live. Streaming Fortnite, they ain't on my league / listening to Stocks Talk. And 3CR0 Plays is now live. Streaming Fortnite, they ain't on my league / listening to Stocks Talk. And 3CR0 Plays is now live. Streaming Fortnite, they ain't on my league / listening to Stocks Talk. And 3CR0 Plays is now live. Streaming Fortnite, they ain't on my league / list. And 3CR0 Plays is now live. Streaming Fortnite, they ain't on my league / listening to Stocks Talk. And 3CR0 Plays is now live. Streaming Fortnite, they ain't on my league / listening to Stocks Talk.